iHeartRadio app. Listen for all your music, radio, and podcasts. Free never sounded so good. Navigating today's real estate market can be tricky. Want to buy or sell a house, finance or insure a house, or stuck with a house and don't know what to do? Florida Talk Real Estate has been your local one-stop real estate shop since 2012. Get the advice you need from your local real estate pros. Here are your hosts, Jim DiPaola and Johnny C. live on Real Radio.
Good South Florida morning to you. Welcome to another edition of Florida Talk Real Estate. And we got you for the next 2 hours of infotainment. Great to have you out there on this. Today's the 6th of September. And again, 2 hours offering you up. Whether you're on 92.1, 101.7, the old terrestrial radio, thanks for being there. Maybe you're using your free download, your iHeartRadio app. We are worldwide if that's the case. And of course, you can join the live stream on a Saturday morning. Florida Talk Real Estate on Facebook. There's a live stream for you. If you're on YouTube, Florida Talk Real Estate LLC on YouTube. That's home of a ton of informational chunk videos, plus a live stream on a Saturday morning. Thanks for being there out the gates. If you're not there now, you can join later. Check out some beautiful faces in the studio, and maybe one or two not so. Let you decide what you like. Everybody has a different flavor. I'm a vanilla kind of guy personally. You're welcome to join us toll free at 877-927-6969. If you have questions, comments, concerns in the world of real estate, you want to take part in the conversation at hand, dive on in. First voice you'll hear, the melodious tones of our producer extraordinaire. There's Jimothy, my brother from another mother. What up, dude?
Hello, and good morning, gentlemen. How we doing today?
Awesome. Always good to see you, my dude.
Good to see you too, Johnny.
That's me, Johnny C., your old buddy, your old pal, your air traffic control on a Saturday morning. Here's your starting lineup. Always great to say good morning to the mortgage guy from the mortgage firm. There's Mike Rauch. Good morning.
There he is. Good morning. Hi.
How are you?
Doing great.
Excellent.
Yes. You?
Yeah.
Ready for some football?
I got a concert tonight.
Yeah.
So I'm a little bit concert intensive right now.
Oh, okay.
But I'm always ready for
You were
some
watching
football.
Thursday, I assume?
I watched a fair amount.
Okay.
Yeah.
You didn't stay up to the end?
I did. Yeah,
Oh, okay.
Yeah. That was probably the most disappointing part.
Yeah.
Thanks for bringing that up, though, right out the gate.
Well, it just, it's opening day.
Yeah, I appreciate you.
Figured
It was a
you
game
were
last night.
excited
You could
about
get a
it.
reference last night.
Yeah.
I mean,
Yeah.
yeah.
No, but Thursday was the first one.
True.
It was important.
It was important.
Division.
Yeah.
Last
Last night was a division game, too, there, Mike. Just so you know.
And in another country too. Right, I mean, talk about right out of the gate, we're going across into a different land.
Yeah. They're in the same time zone, though, right?
If not close. I mean,
think-
at least within the United States.
Yeah, I think they just kind of went straight down last night.
Yeah.
But I don't know. Maybe not the same time zone, but similar. There's Ross Komarinetz with Brightway Insurance, Juno Beach. What's up, Ross?
Good morning. Good morning.
Always a pleasure to see you as well, my friend.
Good to be here.
You look ready to rock and roll.
I am ready to rock.
If there is a look, you are holding it right now, my friend. And speaking of ready to go, there's our fearless leader. I've told you for 13 plus years now, he runs a top producing Keller Williams team, the Florida Home Pro team, Keller Williams Innovations. It's Jimmy D. Jim DiPaola. How you be?
Hey, everybody. Happy South Florida. Got a full moon tomorrow, I think. Tomorrow's the day for the full moon. Pretty bright last night when I was driving home.
It was some weird moon, right? Some sort
They
of.
call it the harvest moon or something like that.
Okay.
Yeah.
Strawberry?
Yeah.
Not
No,
a
I
once,
think it's the
once in a
harvest.
lifetime.
They actually have two names for this one. It's harvest and something else.
The
I
Harvest
think.
Moon? I
Yeah,
think the last one was the strawberry, wasn't it?
I don't know.
I don't either.
it was close.
That's why I'm Googling. I'm going to bing it,
Yeah,
actually.
Google it. I don't
I'm gonna bing
remember.
it.
I'm pretty sure it was. Harvest Moon this time. But
The Harvest?
I feel like there was.
I see
another
the
name.
harvest moon in 2025 occurs on Monday, October 6th.
Oh, okay. So then September 7th is the full moon.
Yeah, it's
Corn
the,
moon.
The
It's a
corn moon.
corn
Corn moon. Oh,
The
that's
corn
the
moon.
name of
The
it. Yeah.
corn moon.
Corn
Mhm.
moon.
Nice.
Okay.
I wonder if there's going to be tariffs on it. We're going to be getting, I know that's a snarky comment, but we're going to get into the economy a little bit later today and talk a little bit
It marks
about
the time when corn is traditionally harvested in North America.
Yeah.
Yeah. I know the soy's not doing great right now. So
Oh, I just read
wonder
and
if-
rice too.
I wonder if
heard.
corn is more prosperous.
Yeah, it's kind of crazy. Hey,
Oh, there's a good one coming up November 5th.
What's that one?
It's going to be the Beaver Moon.
The Beaver Moon.
Nice.
Yeah.
Thanks. I just had stuff.
Here we go. Mhm.
Hey,
Nice beaver.
I want to take a little break
That's a
here.
little Naked Gun callback.
It
right?
is yeah.
Nice.
Yeah, very much so.
I'm sorry. I'm talking to our Facebook, YouTube audience right now. Can somebody that's watching from YouTube or Facebook just put something in the comment? I'm going to try to do something on the videos part of this, and I need somebody's help. So somebody, if you hear this, just say I'm here, and then I want to change something on the video, and then see if there's still audio or not. I need to have somebody from the outside do it, though. I can't do it internally.
Yeah, lifetime experiment.
Yeah.
So we need some volunteer.
Yeah, we need
who's
a volunteer
currently
out there.
listening, but
Right.
also has to stick around for the second part.
Listening on Facebook or YouTube.
Yeah, and
Yeah.
you have to be trustworthy too. We have to
Okay,
trust-
well, Francis is here, and Francis has been with us for a very long time.
I would say
So
trustworthy,
I trust
yes.
Francis.
Yes.
Francis, good morning. Can you respond back good morning? Because I'm going to do something on the video right now, and I want your help.
Boy, that's
I know this
that's
is pretty
intriguing.
crazy.
That's
I know.
intriguing, though.
I've never. I bet you never seen this on radio before.
I wish I was watching the stream. I want to see what happens.
I
She
bet
hasn't-
you've never
she-
seen this on radio.
I've never seen
Yeah,
this.
never seen this on
anything.
radio, right?
I've never seen this on the radio.
Well, she hasn't responded yet. Good morning, Francis. So somebody else, if I'm going to keep bugging about this because I want to try something because it'll make the videos hopefully.
Oh,
lot
there's
better
a
in the
there's a
future.
there's a thing that might make it more better.
Yeah, way better.
Mm.
Yeah, so I'm hoping that we can get that done today. Anyway, I'm sorry, Johnny. I totally interrupted you and Mike, so I apologize for that.
No, we're talking moons. It's all good.
Yeah, there
we
you go.
established
Yeah,
it's the
corn-
corn
oh, the
moon.
corn
We got
moon.
the end of it.
So we got
And the beaver moon's coming up.
we
just
have
for those
some
that care.
we have a lot of stuff to talk about. I guess the economy is something that we should be talking about with real estate today. There's it's like a tale of two cities right now. We have some good news, some not so great news, and some questionable news. We don't know what's going to happen in the future, but it'll be kind of interesting. Well, Francis is saying good morning now, so let's go ahead and try this, okay, guys?
All right.
All
we're gonna
right,
take a break.
Fingers
So
crossed.
I'm going to go ahead and take you out, Jimmy, right now,
Okay.
and I want to see. So Francis,
Oh, he took me out.
Oh,
yeah, there you go.
Damn, that was
Oh, well,
easy.
wait a second.
down.
Now it's not letting me take
No.
you out. That's interesting.
All right. I'll take myself out.
Wait, no, don't take yourself out. It's supposed to be
Don't do it.
removed from state. Let's see. That's removed from studio. Okay, we'll deal with this later. I'm sorry. I thought it would be really easy. Click 2 buttons, be done.
Hey, all
But
you can do is try.
technology's never does that for me.
Yeah, all you
right?
can do is try.
Yeah. Anyway, A for efforts. Thank you, Francis, for trying out for me. I got to mess around with this during the break. Okay, so we got a lot to talk about. The economy is really big news right now. I think we could be at a pivot point, a very big pivot point right now. Something I've been concerned about is starting to raise. I've been talking for years and years. What's the number that we're supposed to be focusing on? Don't say it. But what's the number, in my opinion, we should be focused on to see the strength of the economy in the future? And we're starting to see some stuff that's concerning, not freaking out, not trying to say the whole world's falling apart, but it's stuff to look at for sure. But before we get into all that, I thought it would be funny just to do, we're going to do a couple shout outs, and then we're going to go into something I thought was kind of funny that I've been following.
Cool.
First shout out goes to Mike. I'm sorry, I forgot Mike. Mike D, I should say. Mike
oh,
D.
I thought
was
you were
gonna
shouting
be-
me out.
Yeah, right.
I did too for a second. I was like, nice.
It
Let's
was-
go.
Yeah.
Mike just bought his home on Thursday through us, and then Mike Rauch from the mortgage firm was the mortgage guy
Nice.
for Mike D. The funny part is when me and Nancy were sending emails or texts back and forth about Mike's house, every time we said, call Mike about this, call Mike about that, like just before the closing, Nancy said, you got to call Mike. He has questions about something to do with the septic tank or something. And I'm like, Mike already knows all this, and he told me it's okay. Why is he calling me about this? I go, oh, maybe there's appraisal problem. So I reached out to you. You didn't pick up right away, which is okay. And then I found out Nancy meant to say that the owner, the buyer, had a question. That Mike, buyer Mike, not mortgage Mike.
We had to cross up a mic.
So a lot of mics, a lot of big. We had to start saying Mike D or Mike Rauch, and then they keep going. Mike Rauch, and try to decide which way we're going to go. I wanted to give a shout out to Mike. Mike was a very interesting case in the fact that he's been a renter for a very, very long time, and his landlord kept raising his rents a little bit, but then they said that they wanted him out because they needed to do some type of construction, and they needed him out of the unit. He didn't want to be a renter anymore, but he was on a very tight budget, right, Mike? He was on a pretty tight budget.
Yeah,
for
and
a
I think
single-
in a like a price zone that was difficult to find homes, you know, at a
Right.
price point.
Right, and he didn't have a big down payment, so condos were out,
Most, yeah,
right? Because he didn't
Mostly.
have the 25% down for that
Yeah.
kind of stuff. So we ended up, and he didn't want a condo. He was like, "I'm not moving into a condo," and he had certain reasons for it that made sense. Because sometimes people say they don't want it, but it's the best thing for him. But with Mike, because of what his future needs were, so we couldn't find anything in Palm Beach County. So we ended up closing in Okeechobee County. We bought a place in Okeechobee for him.
Nice.
He got a 2-bedroom, 1-bath home for around $150,000.
Wow.
He had extra equity in it because the house appraised higher than what we contracted it for. And Mike, he got back, well, as part of the deal, they put on a brand new roof. They ripped out the whole septic system, the tank and the whole drain field, redid that, termited the house.
that's getting rid of termites.
Yeah. Oh, yeah. That's funny. Yeah. This is an upgrade.
Termited
A
the
termite
house.
Put a
the
couple
house,
over
right?
here. We'll put
Yeah.
a few over there. That should do it.
Well,
Yeah.
actually, on Monday, I'm going to a place like that, I think.
They have to
um,
be mating pairs.
Yeah. And they gave him 3% back to help pay for closing costs and down
Yeah.
payment, I think.
Sweet.
Right. And we did give them full asking price, right? But we got 3% back, but they did all that extra work on the house.
Well, that's a motivated seller, right? They're understanding there's some things they got to do. Good negotiating on your behalf, huh?
Yeah, I think it worked out okay. Even with all that work, the house still needs work. But he's in a single family home. He doesn't have to. Mike looked pretty happy on Wednesday. We actually signed Wednesday, but didn't close till Thursday, which was kind of scary. Did you hear why we didn't close?
Yeah, I got a text from you that scared me.
Yeah.
Yeah,
He went to the bank, and you're supposed to give your wiring and routing information. So when he went to his bank, the title company gave him the wiring and routing information for where it was supposed to be sent to,
Mm-hmm.
and he added 4 extra digits,
Oh no.
and it went somewhere.
Oh, that is scary.
Yeah, and when I was at the table on Wednesday, the title company says, this is like 3:00 in the afternoon. They said, "Did you wire the money?" And Mike was like, "Yeah, I wired it at 11:00 this morning." And she goes, "Well, we don't see it." And then she checked in, and she walked back in, and she goes, you sent it to the wrong account." And my first instinct was, "Oh my God."
Yeah.
Right. Because I didn't know where the money was. I was thinking, poof,
That's horrific.
it's
Yeah.
gone. Right.
Gone.
Poof, it's gone.
Yeah.
that's the story. Like
Yeah.
that when we're talking about the wire fraud
Yes.
in the mortgage industry, this is what would happen.
That's what happens.
You're approaching your close date, you get an email with wiring instructions. Wiring instructions is a fancy way of saying, routing number and account number,
Send me the money.
right? So when I want to send you money, Johnny, via wire, you give me your bank's routing number and your account number, and boom, I send it.
Right.
So you'll get something in the mail. It's got wiring instructions. It looks like it's come from your closing agent. It's related to your deal, and it's actually some, I say some dude in Africa. I say that just to give you the
Randomize it.
visual
Yeah.
picture, right? Like you're
yeah,
sending your
like
money
these scammers
off into
Right.
somebody else's
and
account,
you have no idea.
and once it's gone, it's gone. Like
Yeah.
you can't recover those. Very difficult to recover those funds. And so when Jim sends me a text and is like, "Oh, yeah, Mike sent his money to the wrong account. Don't worry." I'm like, "What do you mean?" I'm like, "What do you mean? Don't worry?"
And the,
Like,
and
it's like
the
his
funny,
money's gone.
the funny part is while that was all happening, I was texting Mike to respond to him, and it was saying not delivered, not delivered, not delivered, which is very unusual. So I couldn't. I kind of left him hanging, I think, to know what's going on. But anyway, thank God. What happened was the money did go to the right bank, but the wrong account.
Or just
At
that
the bank.
non-existent
No,
account.
they said it went into an account. I don't know how that happened because he added 4 digits to the account number.
Huh.
Right.
I don't know what he did.
I know
man.
exactly what he did, but he added 4.
I was thinking maybe it
incorrectly-
goes to like a clearing account for the bank.
Oh, maybe
and
like a
then-
holding, and
from
then it
there
gets
would
dispersed.
distribute
Yeah,
to a
that
specific account.
That would make sense. So anyway, thank God the money was there. And then he was able to close Thursday. So congrats, Mike, on being a first-time home
Yeah,
buyer.
congratulations.
And really happy for you. I hope you have many, many years out there.
Now he's
And-
got to cut grass.
Well, yep, he has to cut grass. He has stuff to do. The interesting part about that is when I mentioned Okeechobee to him, because I'm the one that brought it up, because I was scouring to find out how the heck am I going to get him a single-family home. When I mention Okeechobee, a lot of people will say no because they feel like it's too far, and very few people go to Okeechobee. I hate to say this. So a lot of people don't even know where Okeechobee is. Like if you ask people on the East Coast here, tell me about Okeechobee, they don't know much about it. But Mike used to be an Elvis impersonator and was in an Elvis impersonator band. He used to do that ring around the whole lake and go to all the bars and do the Elvis gigs.
Elvis
right?
impersonator can do a good
Elvis-
living around the lake. huh?
Yeah, exactly.
Who knew?
So,
Let me polish up my resume.
Yeah.
Witness voice.
so anyway, congratulations, Mike. I'm going to be calling you right after the show, like I promised. The other shout I wanted to do was to Brian. Brian's almost done with the closing on his home up in Dunellen, which is outside of Ocala. We helped him sell his house and then buy a new home. He was going to buy new construction. The new construction builder didn't really play with us nice. And, remember I told you last week, I think we talked about this last week, you have more deals not closing than ever before.
Right.
People walking away.
Yep.
This is a real life example. The buyer went to turn in an offer with this developer on a single lot, not in a community or anything, just like one house on a lot, right? And the house been on the market for a year. So we turned in an offer and we asked for money back to help pay for closing costs and down payment and a little bit of a price reduction. And they were like, no way, we're not giving you that. And then we found out that and this is kind of weird, Mike, the mortgage broker that was working on that case, because Brian knew this lady for 20 years and she did a good job. Carrie's doing a good job. But what she said was, because we were closing in September, that the tax bill, they were going to use the tax bill from the previous, the old tax bill, not the current tax bill.
Yep.
And that was land only.
Okay.
And what they were afraid is they were going to calculate the prorations for the sale on the house for the property taxes based on the land. And then the next month he gets a bill for the developed property. And the difference was like $4,000.
Mm-hmm.
Right. So she said, we need to deal with this. I never heard of that before, but I don't remember if I ever had a closing where we had to worry about this. So I went back to the developer's agent and I said, hey, the prorations might not really be fair to my buyer. We'd like just to put in additional comments that you're agreeing to give prorations based on the developed property of the most recent tax bill. And they said, no, we're not doing that until that's something to deal with the closing department, like the title company, and we'll deal with that when we get there. And I told the agent, who was super green, I was like, no, because then because the way it's supposed to work is, according to this mortgage broker, we're only going to get the prorations for the land and not the developed property. And so we took the offer anyway. And then Brian decided that he saw a couple other houses. We went and figured out how to show those couple of houses to him. And he goes, I like this other house better. And it wasn't a new construction. That's why I asked Ross a couple of weeks ago, is there a difference between a 2020 and a 2025?
Right.
Because I was wondering if there's going to be an insurance increase. There wasn't, right? There wasn't much of a difference. And he ended up buying the other house and he walked away from the other one. And he walked away just because he didn't like the way the negotiations went. And that's what happens in today's market.
Yeah, he's
You
able
would
to.
never see that during the COVID craziness, right? you would just eat whatever the seller said to do or whatever. But now the buyer's like, hey, if I don't like it, there's plenty other fish in the sea.
Mm-hmm.
So I thought that was a kind of interesting one. But shout out to Brian. Got through the inspection and everything. I'm not too worried about the appraisal. We still got an appraisal to go through, but everything's looking great for him. Think he's going to close early. Super happy.
Awesome.
Especially because it took us so long to sell his house. This is like, speed lightning right now compared to when we sold his house. So thank God for Brian. He deserved a break.
Yeah, I was going to say that's well earned. Yeah.
Yeah, definitely well earned. What a great guy too. And thank you for your service. retired firefighter, full run as a Fort Lauderdale firefighter.
Awesome.
And then he did a full run as PBSO, Palm
Wow.
Beach Sheriff's Office. So that guy was a
Fantastic.
double dipper retiree.
Well, you definitely earned your retirement. And again, thank you for your commitment to the community.
Another little thing. Remember, I love talking about that seaweed pandemic we were having all the time, where there was hundreds of millions of pounds of seaweed, the Sargasso Sea. Well, some Caribbean island has figured out a way to take that seaweed, because they had the same problem we have in Florida, and I think it was in the Bahamas, and they were complaining that that rotten egg smell, and that people couldn't get to the beach because there was so much seaweed on the sand that they'd have to walk through all the seaweed to get to the sand. It was hurting tourism and everything. So you know what they did?
Bonfire.
They figured out how to use it for different products. So now they're taking that stuff and they're making like biodegradable packaging goods with it.
Huh.
So they're taking all this like stuff that we consider a nuisance, and now they're turning it into stuff.
Mm.
And I thought that was pretty cool, right?
Sure.
So they're doing biodegradable packaging. And the other thing that they're doing, I'm sorry, hold on. It's a video, so I don't want to turn it off. So I'm trying to do this.
So we're talking like there's a couple of local breweries, and there's one in particular I wish I could give a name shout to, and is it Screaming Reels maybe? Their 6-pack containers actually are the same, and I think it breaks down to like fish food.
Oh,
if it ends up in the water, it's actually food for the fish.
Yeah, instead of like choking them out.
Right.
Yeah.
Exactly. Yeah. It sounds like it's
That's
almost
pretty
along
cool.
those
Yeah,
lines.
like that, right?
Yeah.
So they said, I can't remember, packaging and high performance composites. So they say that they could use this stuff and make it as good as like some of the plastic stuff that you would use, like for plastics, like high performance plastics.
Right,
too.
but doesn't destroy the planet and the environment.
Yeah, and I don't think that who knows? I mean, but I don't think that if you had water in a bottle of seaweed container, that you're not going to get that. What do they call it? All that plastic stuff that you drink, all the
Microplastics?
Microplastics,
Yeah,
and all that.
plastic.
Just the leaching of the chemicals
Plastic.
from the plastic into the
Yeah.
drink. Maybe you wouldn't have that. The other thing they're trying to think about using this for is bricks, building bricks, biogas. I guess they're thinking about actually using it as a fuel and taking the fumes for the decomposition, I'm guessing, because it's already smelly anyway. I'm assuming that's how it's going. But anyway, I just thought it was kind of interesting
That
that
is.
some countries figuring out, they took the American spirit
Yeah. Yeah.
and they came up with, you take lemons and you make lemonade.
Yeah.
And with this, you take seaweed and you make and you make stuff with it. It's like, hey, thank you for all
what
this raw
humans do.
material for
I
us.
hope that goes really well, and then they can. Most importantly, I hope they can profit from it in a way, because without profitability, it's
not going to
probably
work.
Not going to work. Yeah, nobody's going to be driven enough to convert.
But that would be cool. Imagine if then we run out of seaweed because it's
Sargassum
working so
shortage.
good that we have a sargassum. Yeah, sargassum shortage.
It starts
So
going
shortage.
up like gold.
Yeah, $5,000 a pound.
That would be remarkable if it happens. I've been reading a lot in the last 2 months, a lot of articles about oysters in particular. So
Oh my gosh.
they I think it's how many gallons do they siphon through themselves in a 24-hour span? It's a silly
filtering.
silly amount of water that they filter through themselves in a 24-hour span. And so it's almost across the board. All of them have plastic in them now. It's just they've pushed through so much water that plastic's just a part of their existence now.
Wow.
Yeah.
Wow.
So we're just consuming plastic, in
Plastic,
like everything
Right.
we eat now.
Right. It's like taking your.
You ever put a little garlic on your plastic?
I prefer mine with a little garlic and butter.
It's good.
I thought it was just me. But
Yeah, I like my plastic sauteed.
I mean, how long have we been chewing gum
forever. This is
Yeah.
silicone.
Yeah.
Yeah.
or something?
But you're not
Depends
consuming
on
it,
where
right? I don't
You
know.
don't swallow your gum?
I don't.
I mean,
It
listen,
stays in your stomach for 7 years.
if you're getting
Mom said.
microplastics from drinking bottled water,
Yeah.
you're definitely getting microplastics from your chewing
I
gum.
guess there's a chance, right? I don't know how long
Yeah.
it takes to seep out. You know?
Yeah, I know. I don't know. That's
I'm not.
pretty wild.
I'm not much of a bottled water guy. Much more of a tap kind of dude,
Right out
Yeah.
of the hose.
which might not be great either. I don't know.
I know, right?
Depends on where you live.
Exactly. 877-927-6969. That's toll free. You can always be a part of the program. Of course, If you'd like to get involved with the conversation at hand, you're more than welcome. If you do have a question, a comment, concern in the world of real estate, we got the pros for you. 877-927-6969. Of course, if you're not comfortable on the radio, always remember your resources, FloridaTalkRealEstate.com. Your one-stop real estate shop, FloridaTalkRealEstate.com.
I just wanted to mention, I don't want to, we're going to talk a little bit about insurance a little bit later, but California is going through what we're going through right now is insurance companies either dumping or raising the rates crazy high compared to where it was before. Of course, theirs is mostly related to natural disasters, not fraud. Although I don't know why California, I figure like if you had fraud, it would be Florida, California, and New York, right? You figure those are the three states because to me, it's like
problem
those are the states.
with
But
the
why does
fires
Florida
is
always come out to be number one? You figure
Well, how do you-
California and New York
once
would
the
have more.
regulations.
once the contractors figure out how to walk a neighborhood 3 years after a fire and be like, oh, your home actually was affected by this fire, right? that's when they'll really
Yeah.
give us the double whammy of insurance fraud, which is natural disasters and fraud, right? You get both.
Right. The best of both worlds.
Yeah, exactly.
Yes.
When you can combine those two together,
It's winning.
yeah.
I know it's crazy. I remember I was talking to somebody one time and we didn't know each other. We were just like standing in line or something. And he goes, where are you from? And he said he was from California, right? He goes, where are you from? I go, Florida. And this was at a time, it was a long time ago. And this is when we were having all the hurricanes like bundled together, like where we get 2 or 3 at a time. And the guy looks at me and he goes, wow, it must be really scary to live in that state. And I go, you have landslides, wildfires, and earthquakes. And at least we have like a week notice usually that the storm's coming. You just wake up and the whole house starts shaking.
I'll tell
And I
you,
go,
though,
and you're worried about living in my state?
so I know the feeling because I obviously
Yeah,
spent
you've
half my
been-
life in
yeah,
California and my
yeah.
other half here. I know that hurricanes feel like such a daunting thing, and they absolutely are. But when you're not used to it, it feels like, man, I don't know how you guys do that. Once you live here, you're like, oh, this is how you do it, you know?
Yeah.
And Floridians the same with earthquakes and landslides. And
But how do you deal with earthquake other than like,
it's just part
there's
of
nothing you could do, right?
Well, and
you
it's
just
not
step
something-
outside
Just
and
widen
you
your
hope.
stance a little bit.
Exactly.
Bend your knees.
you grow up with it, and it's just the way it is. It's not, I don't know, it's
Wow.
nothing you ever worry about. It's just literally nothing you ever worry
Even
about.
as your house is shaking and stuff's falling off the shelves,
No,
it's
when
like
even when
whatever.
it's over, you're like, oh, okay, that was quick.
they
You're like,
put everything back.
yeah, I was there for the Loma Prieta, which was the
What's that?
Loma Prieta earthquake, which was in 89. That was it was over a 7. That's the one that took out the Bay Bridge. It took out the Cypress. The World Series stopped because
I remember.
there was the
Sure.
A's against
Sure.
the Giants, and they got cracks in the stadium as they were warming up.
Mm.
Like that was, I was leaving football practice, and I can't exaggerate this enough. We were walking on like waves of concrete.
Wow.
Like waves of
Wow.
it was the most unbelievable experience. But when it was over, it was like, oh, it's over. You know? And then you start to accumulate all the chaos. I
Right.
mean, it was tragic. There
Yeah.
was a lot of
Yeah.
destruction. But
Mhm.
if it doesn't hit you like that, kind of like a hurricane, right? If it doesn't hit you like that, you're like, well, that's not too bad.
And that's the one you compare them all to, right? Just
For
like
me.
Andrew, we
For me.
Yeah.
compare all
It's
of our
everything to
hurricanes to
Andrew.
Andrew.
Yeah.
I think that might be forever.
Yeah.
Yeah, because Andrew changed. The
And you know,
landscape.
Exactly.
to me, a lot of people forgot about Andrew. They always think about, to me, Katrina's the big one now. You know what I mean? More people know
yeah,
about Katrina
okay.
than Andrew. I mean,
Yeah.
nationwide, not
And,
Florida. Like nationwide, Katrina. Everybody kind of knows Katrina.
True.
Yeah.
But Andrew, man,
We
I
don't
just
blow the
watched
levees.
it.
We don't remember Katrina.
I watched a documentary on that just recently, like a 20, 30-minute documentary.
On Andrew?
Yeah, and I kind of covered it a little bit back in the day. I was in Key West 12 hours before Andrew hit, and it was supposed to be going south, and then it went to I'm sorry, it was supposed to be going to West Palm. I was in the Key West, and then it went to Homestead. But when I was looking at that was like the perfect storm, the perfect eye. There were just so many
It's a
things about
monster.
it. Luckily, that was a fast storm, though. that didn't stay over us and hang over like some of these last really bad storms that have been happening, like the ones on the west coast of Florida where they were just really slow and powerful.
Right.
At least Andrew, they got in and got out, right? It's pretty crazy. Let's go ahead and take a break. On the flip side, I'm going to ask a question. Are we in a labor recession? Mm-hmm. And we're going to start off with that and what that might mean for buying and selling down here, because that's what we're trying to talk about. Not trying to get into politics. We're just talking about the economy and what that means for people when they're buying or selling.
Yeah, because it absolutely affects the real estate market.
It definitely affects it. Yeah.
They are connected, no doubt about it. We got lots of time. Of course, you're always welcome to join us toll free at 877-927-6969. We are live on this Saturday, the 6th of September. It's a 4-minute reset. And of course, if you're not comfortable on the radio, always remember FloridaTalkRealEstate.com. If you're looking to buy a home, sell your home, if you're stuck with a home, you don't know what to do, if you need a professional, some real good guidance and understanding, and anything that touches the world of real estate, we got you one. FloridaTalkRealEstate.com. These are pros. They're experts in their field, and they work cohesively together. So when you need a professional in your corner, FloridaTalkRealEstate.com is your spot. Know it, use it, love it, share it on Facebook and YouTube. Lots to consume. You can change lives, including your very own, with the pros at FloridaTalkRealEstate.com. We're back in 4 minutes. Thanks for being with us every Saturday right here on Real Radio.
What's a Real Radio podcast? It's Real Radio on demand. Find your favorite show at realradio921.com. Here's what's happening with the weather on Real Radio.
I'm CBS 12 meteorologist Charlotte Carl. Storm clouds are starting to build along that sea breeze boundary. Expect a few isolated showers before about 3 p.m. But then at 3 p.m., that's when the skies are going to sort of open up, leading to heavier downpours across the sea breeze boundary. They'll expand a little bit further in coverage and dissipate in the overnight hours.
This report is sponsored by Rocket Mortgage.
Homeowners, have you been waiting to renovate or pay down debt? Mortgage rates have been dropping, so it may be time to tap into your home's equity. Get started at rocketmortgage.com. Call 800-863-4332 for cost information and conditions. Rocket Mortgage LLC. Licensed in all 50 states. NMLSConsumerAccess.org number 3030.
Hey, it's your boy Johnny C here, host of Florida Talk Real Estate. They're tops when it comes to helping people buy and sell houses. But Florida Talk Real Estate is so much more than that. For 5 years, I've watched these guys help thousands of our listeners with any real estate need. They couldn't do it without their sponsors, who are experts in their fields. Check it out. Jim DiPaola, powered by Keller Williams Realty. Their team specializes in helping people sell their house for top dollar, and buyers get great deals on the purchase of their home. That's what they did for me and my family, and I couldn't be happier that I hired them for my real estate transaction. Mike Rauch from the mortgage firm is one of our favorite guests on the show, and he is the mortgage guy. Whether you're looking for a refi or a mortgage to purchase a new home, Mike Rauch will get you the answers you need. The mortgage firm is licensed to do loans in Florida, Alabama, Tennessee, and Georgia, and they have local offices that cover all of South Florida. So if you're thinking about a refi or a new mortgage, go to the mortgage guy, Mike Rauch, and find out what he can do for you. The Mortgage Firm, Inc., NMLS 189233, Florida license MLD 78, equal housing lender. The law office of Paul A. Krasker has been specializing in real estate law for nearly 25 years and has the professional team you need. Upside down with your house, Paul's team can help you conduct short sales, loan modifications, even if you're behind on payments. They also help you with foreclosure defense and bankruptcy. They can even help you get a student loan modification and repair your credit to get the score you need. Paul's full-service team has helped thousands of our listeners, and they can help you too. Trident Title LLC is the largest privately owned title company in Florida. When you need a title company to complete a refi, home purchase, or sale, Trident Title has got you covered. Not only do they offer competitive pricing, Trident Title has attorneys on staff to make sure if you have bumps in the road declaring title that you can get the job done. Beware, not all title companies in Florida have attorneys on staff. Trident Title does and complies with all the new federal regulations released last year. Ross Komarinetz, owner of Brightway Insurance, has been helping our listeners get great rates on homeowners insurance plans. Haven't checked your homeowners insurance policy in a while? This is a great way to help reduce your monthly mortgage payment. Ross can also help with renters and auto insurance. Ross is only a phone call away and can usually get the answers you need same day.
Call Ross today at 561-425-6228 or drop by his office at 873 Donald Ross Road in Juno Beach.
So now you know why I'm happy to be part of the Florida Talk Real Estate Show, the longest running real estate show in Florida. And all these sponsors are just a phone call or a click away. Just call 888-973-7828. That's 888-973-7828. Or go to floridatalkrealestate.com. That's floridatalkrealestate.com. And don't forget to use the most accurate search engine to find your new home or ask for a free home valuation because floridatalkrealestate.com has you covered. That's floridatalkrealestate.com.
You're listening to Real Radio 92. This is Florida Talk Real Estate with Jim DiPaola and Johnny C. Got a question for the show? Call us live at 1-877-927-6969.
I don't think it'll.
We're going to try it again.
All right, we're going to try it again because we're right back from our break. Hi, Johnny, what's going on, buddy?
What's up, dude? And welcome back. Saturdays are carved out for Florida Talk Real Estate. And thank you for being with us. Johnny C., that's me. That's Timothy, our producer extraordinaire.
Hello, and good morning.
Good morning. Mike Rauch, he's the mortgage guy from the mortgage firm.
Yes, sir. Good morning.
There's Ross Komarinetz with Brightway Insurance, Juno Beach.
Juno, that's right.
Oh, man. And Jimmy D's over here. He's our fearless leader. I've told you for 13 plus years now, he runs a top producing Keller Williams team, the Florida Home Pros team with Keller Williams Innovations. Jim DiPaola, Jimmy D, how you be?
Hey, good. Hey, Jimothy, we're going to go ahead and try.
Okay.
We're going to go ahead and try this thing right now.
All right.
Everybody listening or watching on YouTube or Facebook,
I'm pretty sure.
this is a bad week to what was it? This is a bad week to stop sniffing glue. Remember that from Airplane?
Yeah. Awesome.
No,
Nope.
the sound's out.
No
Okay,
sound.
thanks, Mom. So you know who got your back, right?
Always.
Okay, let's go back. Is the sound back? Is the sound back now? Hello?
Well, you put it back the way it was.
Oh,
it should
damn
be
right.
back there.
Right.
Is
Yeah.
the sound back? Can somebody tell me?
We'll remember here to delay.
What about now?
Yeah.
Hello?
Remember
Hello?
Sometimes you just
Can you
got
hear
to
us?
test it on the live on air.
Well, I
John.
guess
you
There's
hear
no
us?
other way to do it.
Yeah. Hey,
Yeah.
when you own the time,
Here.
you own the time.
Oh,
We'll do
Yep.
what we please. You know what I'm saying?
Yep.
true.
Yeah.
How dare you?
It's our show.
Okay, we're back. I can't do it the other way, Jimmy. I
We're back.
tried.
Oh, well.
Okay. Hey,
All
we
right.
gave it a shot. Thanks, everybody.
All
Okay,
right.
now we're back to radio again.
Appreciate you guys.
We're back to radio, not video. Okay. So I wanted to talk about a little bit first. I've been saying for years and years, everybody's been saying, oh, the real estate market's going to crash. The real estate market's going to crash. How long have we been hearing that, Johnny?
Yeah, long time.
A long, long time. I think
But if you say it long enough,
eventually
one day
you'll be right. Yeah, you'll be right one day. But what I kept saying is, thank you, Francis. What I kept saying is, Magali, is I said, if you really want to know when the economy is really going to get soft, is we got to keep an eye on employment, because what everybody forgets is when we had that bad crash in 05, 06, right, where everybody had dirty mortgages, everybody's writing those crazy mortgages and everything, right?
Very different environment for the real estate market.
But the thing is that people were employed and they had the extra money to go out and get that second house at, with these crazy fake mortgages and everything, right? Because they felt they could afford it, to the extent that they could at least go into the contract. Maybe they weren't planning on keeping it. It was a total investment, but they were like, hey, I can throw some money at this and turn it into something.
Sure.
And that when the economy crashed and people couldn't make their mortgage payments, and then employers, and then then the number one consumer in the world, which is American citizens, weren't buying stuff anymore. And then the employers had to lay people off, and then people couldn't afford their mortgage payment, and then more layoffs, right? And less consumerism, more layoffs, and became a vicious cycle. And we just went down. And I feel like that is what props up our economy more than mortgage rates. Everybody's so always interested in the mortgage rate and the Fed rate and the bond yield and all that. And they're all important. Don't get me wrong. They're all a facet. But to me, the generator behind all this is that we're the number one consumer in the world.
Always. We're
Right?
the
That's
engine.
the thing. 70% of our GDP comes just from us buying stuff.
Yeah, don't stop buying stuff.
Right? Don't stop buying stuff. Johnny's always very
Don't stop spending your
hyper
money.
aware. He's been saying that for so long.
Oh, yeah.
Be a good
Well-
consumer.
That's it. Do your part.
Yeah.
Right,
Go to
right,
You're a
yeah,
Target.
go
patriot.
out, buy- go- right,
You're
go
not in
spend
enough
your
debt.
money.
You're not in enough debt. A little more debt would be
Yep.
prudent. Thank you.
Is that all the debt you have? You slacker.
Come on. The
Right?
rest of us are in way more debt than that.
So it's so true. So the thing is, what I said is keep an eye out on unemployment, because if people start getting laid off, that's when we're going to see weakness in the economy, because we know that, well, at least I think I know that people are pretty highly leveraged. The reason why I'm saying I think I know, I remember during right after COVID where people had more money in their bank accounts, according to the, prognosticators, economists, whatever, than ever before, right? And now more people have equity in their homes than ever before.
Oh, yeah. And you know what I'm seeing a lot lately?
that?
It's not refi, right? Because that's a hard talk, right?
Mhm.
Hey, you should get into a stiffer interest rate.
Mhm.
Tap into your equity. It's HELOC. I'm seeing a lot of you want to get the equity without refining. Get a HELOC. I'm seeing it a
Mhm.
lot now,
Mhm.
and that's always telling when they're like, "Hey, use the money you got. Use the money you're sitting
Yeah,
on." It's
now they're
always
using
telling.
their house as a piggy bank, and
Right.
that's where it gets scary. And part of the reason why those dirty mortgages were written, people were taking money out of the equity of the home that they had,
Yep.
and then using that money, basically leveraging their house on a new second property with a new mortgage.
The way I'm seeing
Yeah.
it, the way I'm seeing it spun the most is pay off your high interest debt with around a 9% HELOC. Consolidate your debt with the equity in your home. That's the way I'm seeing it delivered the most lately in the last
And
probably 2
to
months.
be honest with you, there can be benefits to that, right, Mike?
Sure.
Because what you have to do is you have to make sure that you're not overextended, you're not robbing Peter to pay Paul. If you're really doing it, it's like, man, I've had this credit card debt forever. I'm
I
not
can't
paying
chip
it
away.
down.
Yep.
I'm paying, 29% interest, and I could do this for 9%.
Yeah, half
And
my
if you-
payments interest.
And
Yeah.
if you're disciplined, right, and
Mhm.
you take the money from your house, right, or HELOC, basically that's what you're doing, which is a home equity line of credit.
Mhm.
And then you take that money to pay off the credit cards, and then you don't use the credit cards anymore. You don't build up any more balance. And that's a smart financial decision, right, Mike, in general?
Yeah, I think debt consolidation is generally a good idea, right? You basically are combining everything into one manageable payment as opposed to, several payments that are hard to chip away at the balance. But if you're not disciplined with it, you're going to end up digging. What you just filled in your hole. Now you're going to start digging
A new
new
hole.
hole.
A new hole, right.
And it's very easy to do that because when you do these things, you're not forced to close these cards, right? You're basically just paying it to zero.
Right.
And if you do that, then, how disciplined can you be? Maybe a month goes by, 2 months, 3 months.
And now
6 months
all
later,
that
there's
other
that
debt.
one thing, the emergency pops
Mhm.
up or that thing that you had to get or whatever it was. And then, so, I like the idea in general of consolidating high interest revolving credit
Mhm.
into home equity or, second, a refinance, cash out refinance. People be doing that. Doing it with installment loans, I think is not a wise decision typically. So you say your car payment, for example, say you owed 17,000 on your car. I don't care what you're paying, 12%, 13%, something above what you would get with your HELOC.
Mhm.
But that's an installment loan and has a finish line. right? So you're gonna be paying that 17,000 over the next 3.5 years or whatever it is. Well, then you convert that to some sort of longer term, like a 20-year or 30-year amortization, and you're stretching out your car payment that would have been done in 3 years at 13%. Now you're going to pay it,
who knows?
10 years, 12 years, 20 years, 30 years, whatever it is at 9%. Well, guess what? That's a very expensive car at that point.
Yes.
If you walked into the car lot and they're like, hey, would you like the 3-year, 4-year, 5-year, or the 30-year financing? Well, guess what? If you want that low payment, take the 30-year financing on your car.
Yeah. Right, exactly. So
I don't know how many cars these days are going to expect it to last 30
years.
Yeah,
30 years, right?
I don't know if they make them like that
So
anymore.
they don't make them like that anymore. So so with this so worrying about unemployment to me is a really big thing. Now, we started this year at 4.1. I've been saying forever that 4.1 is a very, very good unemployment rate. It's always, it's a very doable mortgage unemployment rate. I remember when
is that better or worse than like a flat 4%? No,
well,
like seriously.
What do you mean 4 versus 4.1?
Yeah, like you said, you like 4.1 as a benchmark
in the fours. And what I'm saying is like because when Clinton was president, we got below the 4s for unemployment at one point, and people were complaining. The corporations and business owners were complaining that there weren't enough people for all the jobs that they needed to fill. So everybody's like, there's not enough fluidity in the market. There's too little people unemployed right now, right? The other thing I figured out was, and this was like, I think last year, I went down a wonky hole and I figured out roughly what 1% is in unemployment, like how many jobs that is or how many people unemployed. And I figured out to about 1.5, 1.6 million for every percent, right? So if you're only 0.2 higher, because we went from 4.1 to 4.3 in this last report. Not a big deal in the long run.
Oh, I thought it went from 4.2 to 4.3.
Well, actually, yeah, but that's true. I'm talking about from the beginning of the year. We started beginning of year 4.1. I think like June we hit 4.2, and now we're at 4.3. But you're right, Johnny. So we went up 0.2 from the beginning of the year.
Yeah, and they actually readjusted as they always do the jobs numbers. And I think for June it was negative job creation.
First time since 2021.
Yeah, which is fascinating. You're like, so you mean we don't call it negative job creation. We call that loss of jobs.
Well, right? Because that's a different report. That report you're talking about was called the job
elimination.
No, job labor transfer, job opportunity labor transfer. Remember here called a JOLT. I never heard of JOLT before. It's like, what's JOLT? Why do they call it that?
It's a cola.
Job opportunity.
Yeah,
JOLT cola. Right. Job opportunity labor transition or something is what it's called. Right. So it's basically saying how many opportunities are out there and how many jobs are, how many people want a job and how many jobs are out there.
Right.
And that's the first time I've ever seen negative. That other report, you're right. That was a different report. The unemployment report was revised.
It was
revised.
Right.
Just like it got revised the last time.
They always do.
Which they always do. And supposedly, I read in the Wall Street Journal yesterday, September 9th is a big deal because they're doing a readjustment for the whole year.
Oh, boy.
And they're expecting to get even more gloomier numbers once they readjust.
Boy, there are some people that are like, I'm totally getting fired when they adjust these numbers. I'm totally getting fired when they adjust these numbers.
Oh, because they're not going to they're not going to like the numbers.
Yeah.
Like the federal government you're talking about, right? Those Bureau of Labor Statistics people, right?
The head of the BLS got blown out.
They get bad news and they're like, oh my God, I'm getting killed by, I'm the messenger and I'm going to be killed.
He was blown out. The head of the BLS lost his job.
The only thing I read was, and that did suck.
Yeah.
But there's 2,000 statisticians in that. So they'd have to go through a lot of people in order to get the stuff wrong.
Right.
You know what I mean?
Yeah.
No, how do they get it right is what the path that they're searching for.
You lean over and go, what number do you want?
Right.
Like Zuckerberg. Is that okay?
Jim, I don't like these numbers. How can we get correct numbers?
What do you mean?
Right. Like that's the premise.
Well,
right. I don't like these numbers. How can we get correct numbers?
Well, Ross, you own a business. So did you ever get a call from like Tallahassee asking me how many employees, like every month, how many employees you have and how many you're employing or how many they think you might be laying off?
I mean, I think we used to get something in the mail that we had to do.
I used to get a call every month, right? From somebody in Tallahassee that was trying to, and they were just doing surveys. And my attitude was, hey, any more information is better. I'll try to help out my little tiny business if it makes a difference,
And you
right?
take part of the census.
Right, but I took part, and I did it over and over again. And then after a while, I got a little mad about what was going on about in general everything. I'm like, I don't
No
need
more,
to be,
no
I'm
more
done.
free info.
Yeah, no more free info.
But they were asking, are you
Wow.
planning to hire?
But
are you
that's
planning
how-
to cut back? Like,
Right. They would
Yeah.
say, how
Oh.
many employees do you have? Are you, and they say, in the next certain time period, are you planning on adding employees and how many? Or are you planning on decreasing the employees and how many? And they would ask you, did you hire anybody last month or did you let anybody go last month? That's how these reports are put together. You have people calling all over the country, right? And they're to business owners trying to figure out what's going on. And it's just a matter of whether I'm there to pick the phone up or not.
right. And
So
you're
now
gonna
you get
rep-
it. So actually, now you get an email. So I was going through like
Oh, did you?
I randomly checked my Gmail account
Mhm.
and going through, and I had it from like a survey from this is like last week.
Mhm.
A survey from I think it was just, and they were asking me about like a 2-week period.
Right.
Like a
right.
specific 2-week period. Like,
Huh.
were your receipts up? Were your receipts down? Did you add more? Same amount of employees, same amount of pay. Like it was. I think I got sidetracked with something else and had to go do something, and then it
You
logged
didn't
me
do it,
out.
right? Yep.
It logged me out, and then it wanted like I was like, all right.
And that's why you see the revisions, because when they're coming out with the monthly report, they're calling like me and Ross up and all these corporations all over the country, right? And they're trying to figure out what's going on. And then somehow behind the scenes later, they'll see what really happened for real, not in live time. So it's like a whole bunch of stuff going on. And that's why it is pretty amazing when the stuff has been revised. We've talked a lot about that on the show over the years,
Yeah.
right? Remember, we were getting 250,000 jobs created per month. And then like a month later, it's like, oh, that 250 was really like 195 or
Mhm.
whatever, right?
Yep.
Or it was the opposite way a
Opposite.
couple of times, right? Hey, we did 150. Oh, they revised it to 175 or whatever, right? So here's a couple little other factors about unemployment and employment. For the first time since 2021, we have more job seekers than jobs available. Now it's only 20,000 difference. We have 7.18 million people looking for jobs, and we have 7.2 million jobs. So there's only $20,000 gap, but that's the first time we've had more people than jobs looking than jobs available in a very long time. It's such a small amount, but it is kind of like that. Remember when the charts inverted on the bond yields, and that's pretty wonky, but the 10-year and the 2-year inverted or something like that. That's kind of like what this is, where cats and dogs are playing together, and all that kind of stuff. Like it's kind of weird. So that's a little sign of weakness. The unemployment has ticked up twice now. Okay. Now 4.1 to 4.3, we're talking about 32,000 jobs roughly.
And we're still right in the range where the Fed likes it.
And 4% is
Yeah,
awesome,
it's right
guys.
where they want it. But there, as far as health of employment conditions, you would like for employees to be able to have some options to leave their job, right?
Yes.
Are there other options for me? And if you don't, that feeling stuck in your position is part of that kind of downslide for an economy.
People get nervous, and then they start strapping.
Stop spending.
Yeah, they start.
Again, we have to spend, y'all.
I know we need to spend, right? We're a spending economy. That's what, they talk about all the stuff that we're good at. We're best at
great at spending.
Yeah, we can spend all day long.
Yeah, and we're good at smashing stuff too. We can smash.
So that's some real stuff to think about. So we're seeing unemployment tick up, right? Not the end of the world, but it's something to really keep an eye on. Because I'm telling you, I think that once we get into the sixes, we're going to have problems.
Sixes, yeah.
In the sixes, which would be like 3 million more people laid off, is what I'm saying.
That is going to be.
If we have 3 million more people laid off, it's really going to. Now, is it going to be
fives? I think we're having major issues.
I think that's my question. I'm wondering, are we the frog in the pot of water and they just turned it on?
Oh,
maybe that's what we're experiencing right now, because we've seen that creep up a little bit. We've seen it go up and down, but we haven't seen it gone up twice. Even though it's a small amount, we haven't seen that. We've also seen the job offerings versus job seekers invert, right? That's another thing.
Right.
And inflation is going up again. and nobody's talking about it that way.
Doesn't it? Don't you feel like the slowdown in job creation more than anything? Because again, the last quarter revisions, the numbers show, our GDP was up, and it's really supported
And
by
a good GDP
like
too.
exports are down. It's a lot of smoke and mirrors in the number. If that number is accurate, the Fed should be doing nothing. But
Right.
it looks like it's almost 100% chance.
They're doing it.
Right. So that tells you those GDP numbers are not real. But when you extrapolate the reason for the GDP number, again, it's 70% of it supported by our spending, and it's how our economy's built. So it's expected. But exports are down. But I think a lot of the slowdown is uncertainty over future effects for tariffs. I think the uncertainty in that world is what caused so much of the business minds to ease off. And I don't know if that uncertainty doesn't go away, even if you give them access to cheaper money. So if the Fed lowers the rate, give companies access to cheaper money, I don't know if that uncertainty is still in play, that they're like, well, let's spend. Let's open up some positions. Because I think the uncertainty more than anything is what's keeping the hesitation still very much in play.
I agree with that. I definitely do agree with that. And look at what's happening with the tariffs in general. I mean, the legality of the tariffs is what I mean.
Now there are some legality aspects that are really coming into play where they're like, well, that's not, can't do that.
Right. So of the 170 billion that we've gotten in tariffs so far, that's the statistics I'm reading. So far this year, we got 170 billion. 2/3 of that is in jeopardy right now because by the federal judges. They had that 11 bank judge group 7-4 ruled against 2/3 of those type of tariffs, saying that that's a function of Congress, not the president. Now 1/3 is the function of the president. They can keep that, right? But 2/3, let's just say it's evenly distributed, that's 120 million, 110, 120 million dollars. $1 billion. That's got to be given back.
Yeah, given back to who?
That's the interesting thing. I don't know the answer to that, but this is really going to show who's paying the tariffs.
Well,
where does it go back?
Where does the money go back to?
I want to know. So
It'll be interesting to see.
I would be curious. Play that out, right? Let's say there's some sort of ruling, and basically these tariffs that have been paid by the importers to the federal government. That money has to go back. There's only one place it can go back to. It's got to go back to whoever paid it.
Right.
But what do those importers do? Do they reimburse? Like, was it passed on? Was it the people that they bought the products from? So these importers who actually paid the tariff, it'll be interesting to see what if they get a refund check.
They'll get it.
What is going to happen to that money?
In their pocket.
And yeah, right?
Yeah.
And then are their prices going to go down? No, not enough. Not to the pre 2025 levels.
I think you need to get used to these numbers because this is ours to keep.
Yeah. Well, even Besson said
but
that.
won't there's competition.
Do I have to accept that as the reality, Johnny?
I think we do.
Seriously?
I think we do.
That's the reality we have to accept, that the tariffs
it
cost us money and they're here to stay, even if they go away.
Well, because we're consuming at almost the same rate, so we've accepted that
the higher
prices, right? Once it's part of the acceptance,
but I don't think most of those costs were passed on to the consumer. From what I was reading, the companies were
it's a slow burn,
absorbing the cost.
It's a slow burn,
right? So I mean, I don't think those.
It's some. I have a friend.
We haven't gotten used to paying higher prices yet.
I have a friend that is in a business that
that's
imports a lot of like Chotsky stuff, like little tiny like inexpensive jewelry and stuff, and then
knickknacks.
Knick-knacky things, right? But he gets it all from India, China, stuff like that. And I asked him, I said,
that's where the kids are really good with their hands.
Yeah, exactly. I go, are the costs going up? And he goes, yeah. And I go, are you passing on? Are you passing it on to the consumer? And he goes, some of it we're absorbing, but they're not going to be able to handle that. You can't just absorb it.
Right.
It means you're taking a loss of what you were making before the tariffs were in effect.
Right. So now
absorbing is a loss.
What happens if companies make less money? Do they add jobs?
Yeah, right.
Right? Do they what?
Right.
Do they spend more? What do they do?
I found an interesting aspect there, and I don't remember the term, but there's like a $800-900 limit. Anything under that like avoids
that minimus thing,
the
the
minimus
minimus
thing.
thing,
And
the minimus tax, $800. It's
Yeah.
800.
but that's kind of being wiped away right now. So
they won't send stuff
a
over.
lot of the consumption from stuff like Etsy, these more boutique type things, they come from overseas, and the action that's being put in place is actually requiring USPS, the deliverer, to then be the tax collector to collect the tariff as this stuff's coming in. And they're like, no, we're not. That's not our job. We don't do that. So what they're doing instead is just being like, cancel the order, cancel the order, cancel the order, cancel the order. They're just like, we're not going to deliver that. Find another way. We're not going to be the
We're not
tax
going to be on the
collector.
hook.
We're not taking the tariff money. We're not doing that. We deliver the product. But if you're going to incorporate us as far as the collection, we're not doing it. Yeah. So now there's just all kinds of stuff. We'll see. It's September. We'll see how Christmas gets affected.
That part's gonna be crazy.
Yeah.
Couple other things I learned about all this unemployment stuff and all this stuff that's happening right now. The jobs report. Here's something interesting. In order to have a net, let's say if we wanted to stay at 4.3% and not go up in unemployment, you got to create 50,000 jobs a month, right? 50,000 jobs a month is what you need to create to have like a
flat,
0% increase or decrease on your unemployment rate. I thought that's interesting to know. So when you read those monthly job reports now, we can at least have a measurement where we need to be, right?
You're saying you have to have a 50,000.
You have to have 50,000 new jobs, people hired.
Because there's going to be 50,000 that go away?
They're just saying that's the break-even point.
So, but if 50,000 breaks even,
so if you had 30, like for example, in June, we had negative 13,000 people employed.
Negative creation.
Right. So that means we're 63. That would mean we're 63,000 behind from being flat. The 50 you need that month plus the 13 you lost.
And that doesn't totally equate to the unemployment number because that only accounts for people that are collecting unemployment.
Yes.
Right.
Right. And there's something like 9 million people that aren't collecting or something.
Right.
But that number is always out of it. You know what I mean? Like that part's
here's always another little factoid that I thought was interesting. So 50,000 a month is what we need for job creation. On the unemployment side, 10,000 a month since January has been the federal government.
Yeah.
So 10,000 a month is what we're losing from the federal government. I think they felt like we lost 170,000 total already, which I know is more than 10,000 a month because we're only in the 9th month. But
I feel like
they've
a lost
lost
job there isn't the right word either.
Yeah.
Like those jobs were taken.
Eliminated.
Yeah, eliminated.
Yeah, no,
Destroyed.
They were learning. Right, they were layoffs. It was as far layoffs, firings, whatever you want to call them. Right, some of them were firings, right, but they were overall layoffs.
And a lot of those are still
they're still coming.
Contested.
Right, they're still coming. Now, during Clinton, we laid off 300,000 people during Clinton.
It's not unprecedented.
So it isn't like it's evil Darth Vader thing. It's just what happens. I don't necessarily agree with the way it's happening. But they have the right to do that and all that. And we've done it before. And Clinton had the strongest economy of everybody. I hate to, some people hate to hear that, but it's true.
Well, you only hate to hear it if you pick sides, if you have like an interest in a certain
if you have a certain
if you actually care about the country, you're like, oh, great.
Yeah,
awesome.
Exactly.
And if you leave out the name and you just say the president
like 92
that had
to 98
the
or
last
something.
Balanced budget, in
in
modern times or something like that.
And I'm not like that. I don't treat politics like I don't
have a jersey.
Yeah, I'm not wearing a hat on either side or anything. You don't see me doing
Actually,
that.
if you described it that way and you're like, so basically you got a balanced budget, and one of the big pieces was laying off a big chunk of the federal government workforce. And you're like, which president did that? Like who would know the answer to that question? Right? There's one in recent memory, and then of course Clinton.
There'd be recency bias for sure.
Right.
Yeah.
And and Clinton had a very strong economy, and he did a lot of things that pissed off Democrats, right? He did a lot of things that he didn't the Democrats did not like.
Him and Newt Gingrich worked very well together.
And they hated each other.
They hated each other.
Yes. But it's kind of like O'Neill and Reagan.
Yeah. They hated each other, but they got a lot done.
But they got it done.
They worked on both sides.
And that's what I want my country back to again. You know, I just, that's all I want is like, no side has all the answers.
That's
You got to collaborate.
Find the
It
middle.
seems like the strongest we've
You
ever
haven't
been.
asked both sides then.
Yeah. Well, let's go ahead and take a break. And on the flip side, we're going to talk about something positive about the economy, right? Mortgage rates. Who would have thought that that's a positive sign? But we got some really good stuff to talk about that. And,
I love it.
And I'm going to ask Mike a really good question. Let me just leave off on this. I had somebody call up. They were in trouble. They thought they were in trouble with the mortgage because they needed a new roof. They couldn't get a HELOC. So they ended up getting a 203K loan, right? And the person that did it, I called them after they had already figured all this out because I thought they needed to sell the house, is they said, oh, yeah, I'm not paying anything for that loan. I'm not paying any costs for that loan. So we're going to talk about that in a second.
Okay.
Because I told them, oh, yes, you are. And they didn't know me very well.
They were adamant that
they were like, they were very quiet. I'm like, if your mortgage broker told you you're not paying anything for this mortgage, you need a new mortgage broker.
Oh boy.
Right. So we're going to talk about that on the flip side.
We got lots to get into. Plenty of time remaining. Remember, we get you for 2 hours of infotainment. Jimothy, locker room live at 11. Yes.
Sure is. Yep.
Oh, all right.
2 hours and then right into Gator football right at 1 o'clock.
Taking on USF.
Mm-hmm.
Yes. USF looked really good against Boise getting things started. This should be a slobber knocker today. Who's Florida State playing? Ross.
I don't know.
All right. We'll
Yeah,
find
the
out
bye
during
week.
the break.
I don't know.
They smashed. I thought about
We
it.
had one guy who smashed Alabama. Florida State Castellanos. Let's go.
Man.
Have you ever heard of East Texas A&M?
No.
That's who they're playing.
Huh. Interesting.
East Texas
You're
A&M.
making that up, right?
No. Right?
That's weird. I thought I've heard
That's
of
right.
every school.
Yeah.
No,
Am I
we'll
right?
find one to
I
play.
wonder what's
We'll
their
find one to
mascot.
play
What's
that you
their
haven't heard of.
mascot?
It's a girl's school, right?
It's like a shield.
Florida.
It's just a black shield.
Huh. Yeah. What is? You got to look at their mascot, please. Have to.
It's East Texas.
East
Why would
Texas
Texas have a shield?
A&M.
What would they
It's
use to-
officially
It's like a
known.
lion?
Maybe you know this one.
So it's a
Texas
military
A&M
school.
University Commerce.
No.
Tamuk.
Tamuk.
Tamuk?
No. Wow.
Um,
I learned something new every day.
Then you-
You learn something
I'm checking
today.
something
Yeah.
off right now. Yes. Well, I got a lot to look into here during this break. Oh, remember FloridaTalkRealEstate.com, your one-stop real estate shop. Know it, use it, love it, share it. If you're buying a home, selling a home, stuck with a home, you don't know what to do. If you need a professional in the world of real estate, FloridaTalkRealEstate.com is for you. Write it down. I'm telling you can change lives. Your very own can be changed with the pros. What you got, Jimothy?
Lucky the Lion.
Lucky the Lion.
Lucky the Lion.
You better hope he ain't lucky today, Ross.
He's not getting lucky
That's
today.
going to be embarrassing. We're back in 4 minutes. Florida Talk Real Estate right here on Real Radio.
Tell your smart device to play Real Radio 92.1 on iHeartRadio. Go on, tell it. Show that damn thing who's boss. Here's the latest with weather on Real Radio.
I'm CBS 12 meteorologist Charlotte Carl. Storm clouds are starting to build along that sea breeze boundary. Expect a few isolated showers before about 3 p.m. But then at 3 p.m., that's when the skies are going to sort of open up, leading to heavier downpours across the sea breeze boundary. They'll expand a little bit further in coverage and dissipate in the overnight hours.
This report is sponsored by Rocket Mortgage.
Homeowners, have you been waiting to renovate or pay down debt? Mortgage rates have been dropping, so it may be time to tap into your home's equity. Get started at rocketmortgage.com. Call 800-863-4332 for cost information and conditions. Rocket Mortgage LLC, licensed in all 50 states. NMLSconsumeraccess.org, number 3030.
Hey, it's your boy Johnny C here, host of Florida Talk Real Estate. They're tops when it comes to helping people buy and sell houses. But Florida Talk Real Estate is so much more than that. For 5 years, I've watched these guys help thousands of our listeners with any real estate need. They couldn't do it without their sponsors, who are experts in their fields. Check it out. Jim DiPaola, powered by Keller Williams Realty. Their team specializes in helping people sell their house for top dollar, and buyers get great deals on the purchase of their home. That's what they did for me and my family, and I couldn't be happier that I hired them for my real estate transaction. Mike Rauch from the mortgage firm is one of our favorite guests on the show, and he is the mortgage guy. Whether you're looking for a refi or a mortgage to purchase a new home, Mike Rauch will get you the answers you need. The mortgage firm is licensed to do loans in Florida, Alabama, Tennessee, and Georgia, and they have local offices that cover all of South Florida. So if you're thinking about a refi or a new mortgage, go to the mortgage guy, Mike Rauch, and find out what he can do for you. The Mortgage Firm, Inc., NMLS 189233, Florida license MLD 78, equal housing lender. The law office of Paul A. Krasker has been specializing in real estate law for nearly 25 years and has the professional team you need. Upside down with your house, Paul's team can help you conduct short sales, loan modifications, even if you're behind on payments. They also help you with foreclosure defense and bankruptcy. They can even help you get a student loan modification and repair your credit to get the score you need. Paul's full-service team has helped thousands of our listeners, and they can help you too. Trident Title LLC is the largest privately owned title company in Florida. When you need a title company to complete a refi, home purchase, or sale, Trident Title has got you covered. Not only do they offer competitive pricing, Trident Title has attorneys on staff to make sure if you have bumps in the road declaring title that you can get the job done. Beware, not all title companies in Florida have attorneys on staff. Trident Title does and complies with all the new federal regulations released last year. Ross Komarinetz, owner of Brightway Insurance, has been helping our listeners get great rates on homeowners insurance plans. Haven't checked your homeowners insurance policy in a while? This is a great way to help reduce your monthly mortgage payment. Ross can also help with renters and auto insurance. Ross is only a phone call away and can usually get the answers you need same day.
Call Ross today at 561-425-6228 or drop by his office at 873 Donald Ross Road in Juno Beach.
So now you know why I'm happy to be part of the Florida Talk Real Estate Show, the longest running real estate show in Florida. And all these sponsors are just a phone call or a click away. Just call 888-973-7828. That's 888-973-7828. Or go to floridatalkrealestate.com. That's floridatalkrealestate.com. And don't forget to use the most accurate search engine to find your new home or ask for a free home valuation because floridatalkrealestate.com has you covered. That's floridatalkrealestate.com.
From the Anajar and Levine Accident Attorney Studios.
Have you been in an accident? Call Anajar and Levine Accident Attorneys at 1-800-747-FREE.
That's 1-800-747-3733.
Real Radio 92.1 is WZZR West Palm Beach, an iHeartRadio station.
Make us the #1 preset on your car radio and on the free new and improved iHeartRadio app. Listen for all your music, radio, and podcasts. Free never sounded so good. This is Florida Talk Real Estate with Jim DiPaola and Johnny C. Got a question for the show? Call us live at 1-877-927-6969.
Yep, that's it. 877-927-6969. That's toll free. I'm going to dial in right now and see if that thing rings.
All right.
I'm just going to give it the old
Are you?
try here. Yeah, because I'm staring right at it. So I can see if it
You're
happens.
like, why isn't the phone ringing? The lines are down.
Well, I can only assume because, I mean, there's been plenty of entry for conversation.
Oh,
And maybe they just like to sit back and be entertained. And that's always possible.
we've got a very discerning audience. They like to listen. Oh, yeah. I hear something.
Hello. Hi.
Oh.
Hey, Jim.
Put your right on air.
Nice. Thanks, dude.
Look at that,
You didn't
it
even
works.
screen me.
Nope.
Oh.
What do you want to talk about? Nothing. Just
Nope.
straight on the air.
Let it rip.
Jimothy is our producer extraordinaire. I'm Johnny C., your old buddy, your old pal. Mike Rouse here. He's the mortgage guy from the mortgage firm. Hello, my friend.
Mm-hmm. Hello. Good morning.
Ross Komarinetz is right across the room from him there. It's Ross Komarinetz with Brightway Insurance. Juno.
I can't even see him through all of our stuff.
I know.
Hey,
We have
Ross.
so much setup. Hey,
I
how's it
know
going?
it's too much.
That's why we have to
I'm
look
u-
at the computer.
I'm being blinded by this light. Usually I'm blinded by Ross's light. You know, he's got that glow that comes off of him.
Settle
just
down,
in general,
man.
right?
Yeah.
Hi, Ross. Hey, over there.
How's it going?
There he is.
To see half of you.
Yeah.
Most of you, at least. Well, you can see each other on the stream. You can
That's
check out, too, Florida Talk Real Estate on Facebook, on YouTube, live stream every Saturday. You can see them. Yes, they are having some tough sight lines on each other in here in the studio, though.
Yeah.
But we can all see Jimmy D. He's right there. It's our fearless leader. 13 plus years now. I've told you he runs a top producing Keller Williams team, the Florida Home Pros team, Keller Williams Innovation. Jim DiPaola. It's Jimmy D. How you be?
Hey guys, happy South Florida, happy Saturday. It was a nice drive down here today, and
Weather-wise, you mean?
weather-wise
Yeah,
was
beautiful
good.
morning.
And a really beautiful morning. I love the clouds and everything coming down
Nice.
here. wanted to get into some good news after last segment, talking about higher unemployment and
People running out of money.
inflation and all that kind
Don't
of
stop
stuff.
spending.
Let's talk about
Jeez.
some of the good things. We just hit our low for the year for interest rates, 6.5.
Mortgage rates.
Mike, now,
Here's a headline: mortgage rates tumble.
and you know, what do you think we were at in January? Mike might know this, but what do you think? I didn't even know.
Which January? This year?
Yeah, January this year.
Like
January
7.
1963.
Like 7.
Huh?
Like 7.
7. What do you think? What do you think, Ross?
6'8".
What do you think?
Yeah,
Jimmy?
6'8", 6'9".
6'8". Yep, 691.
Yeah.
So
Yeah.
691, we're at 6.5.
Mm-hmm.
So Mike, if you were buying at 691 or 6.5, and let's say that was your true rate, not with with private mortgage insurance and things like that.
Same loan.
Same exact everything, just 0.41 difference. For most people that you work with, the majority of them, not the ones that are like skin of their teeth trying to get through, but unless most of the people are skin of their teeth get through, is there that much of a difference in your mortgage payment with the 0.41 increase?
Probably not enough to like you could figure out a way to make it work on the same house, but it definitely, so I mean, I'd love to like bring up some numbers, just like what's a half a point difference on the same loan amount.
Maybe we'll do it next week or something.
I can do it just if you give me a minute, but
yeah,
I mean, something would have to give, right? So all things being equal, let's just say same house, same price, same loan amount, 7% versus 6.5%. Obviously 6.5 is lower. And if you're at your very limit and you got the higher rate, like something has to give. So maybe probably insurance is like that. You'd have to get your insurance, $40 lower a month or something like that to make it work. So yeah, it could make a difference, and it definitely is important. Is it critical? Is it like deal killing? That half a point? But who's really in that scenario?
$40 a month. Tell me if I'm wrong. Is not. It's like that's like 5,000 for most people. It's like 5,000 or 7,000 on the price, right?
Yeah.
So if you got 5,000 off, you make your 40. If you go to the seller and you knock off 5,000 on the price, you're back to the same rate.
Yeah, it's not world changing,
right?
It's not like, hey,
that's the point I'm trying to make.
The difference between
5% of your buying power, though, isn't it?
It is. That part is. That's true, Johnny.
It depends on how you want to look at it, right? So, yeah, you could buy your home. In order to get the exact same payment, you got to buy it at 5% less, right? Or your loan amount's like 5% less than apples to apples. But it's kind of it's interesting to talk about, but who is in the zone where rates moved 0.5% during the time that you're able to,
close,
where you're shopping, buying, getting into contract and have a close date?
There's only been 2 times I remember in our career that we had
that kind of movement, and
we had that kind of movement. Yeah, like when you're working with one buyer and you got to buy them the house, and the mortgage rate's going up as we're looking. We've had a couple of times where that's pretty hairy stuff when you're the buyer's
But this
agent.
is one of those, like Johnny's a good example of he has done what we recommend someone do, which is you're a potential buyer. You don't have to do it at any particular time, but you want to keep your finger on the pulse of the market. And one of the tools, so he's looking at homes that ping for him based on search criteria, but he's also able to analyze numbers. And he's doing it over a length of time where we really kind of have to adjust his numbers from time to time to make sure he's looking at a correct interest rate, right? So I don't have like the system set up where it's like tracking Freddie's report. Maybe I could do something like that, right? But everyone's situation is a little bit unique. How much down payment? What's the credit score? Those things.
Like a snowflake.
Yeah, but you have to, so Johnny is over a length of time looking at things where you have to keep that adjusted because he wants accurate numbers, because accurate information is part of his decision-making process.
Yep.
Right. So that's the person who kind of like this movement from January of this year to now. Well, he's been looking since January of this year. He's been looking longer than that. Right. And some people are like that. But if you're the person who's actively shopping, like I'll call it like boots on the ground house hunting, we're not seeing a 0.5 point increase right now, in a week. Like this was big news and we went down
It took us 9 months. It
0.06.
took us 9 months to get down 0.41.
No, but it was 0.06 downward movement.
Oh, right.
This week,
Right,
like week
because
to
it was
week,
6.56, and now we're at 6.5.
and we went from 6.72 mid-July. Let's just say this. So end of July, 6.72, and now we're at 6.5. So that's like a quarter of a point movement,
right? Quarter point
in a month and a half, which we haven't seen this year, really.
Right.
We haven't seen it, but so it's something you got to keep in track of, or keep track of, especially if you're actively shopping. If you're pushing your limit on what you qualify for, and you're out there shopping with the generic pre-approval letter that doesn't take into account this type of small rate movement, doesn't take into account, that's usually not the big problem. The big problem is, you're not approved for 500,000. You're approved for some payment,
right?
But then you're estimating up to a purchase price of 500,000. But you could buy home A at 515, and home B you can only buy at 475. Right? Like that's so it's,
and people are like, why? Well, the taxes are different on that one. The insurance is different on that one. Like there's other variables, right?
Yeah. One of the things I want to talk about the mortgage rate. So the 6.5, I want to talk about this, but I want to wrap up this part. The 6.5 is the lowest part of the year. If you were thinking about buying this year and you're waiting for the interest rates to drop, okay, or you're waiting for the Fed to cut the rate, drive me crazy. It's already cut, guys. When the Fed comes out on September 17th or whatever, they cut the rate. Does anybody here believe that it's going to drop the interest rate? I don't.
So, I mean, just look at this.
I think it's been baked in. I think we baked it in already.
Like this is the perfect example where the mortgage rates are not tied to the Fed rate, although they're, in this case, predictive of what the Fed's going to do. The jobs report comes out. It's got some issues like in the wrong way, right? It's not like overly optimistic. No, it's the opposite of that.
Yep.
The bond yield goes down because of that. And mortgage rates follow the bond. That's what happened this week, guys. Bond, the 10-year treasury yield goes down. Mortgage rates are pretty much pegged to that, and they go down.
And we saw that last year.
That's a direct steering mechanism, though, right?
Yeah,
I mean, that's a direct.
It's almost direct. It's almost direct, right? I read that it isn't exactly direct, but it's close. It's the closest you can get.
Pretty much is. Yeah, I mean, I don't know what else is the more direct driver of the yield on. Remember, like it's kind of, you get into the minutia here, but mortgages are an instrument that pays a fixed percent. Like that's why they're really attractive. Like you're going to get on this investment, this will pay. This tranche of mortgages will pay this much money, 5%, 4.5%, whatever the note, whatever it is, for the next 30 years if you hold the paper that long. Right. So it's pegged to like the daily rate, whatever they're offering for the mortgages that are packaged up are basically just tied pretty much directly to that 10-year treasury. And that determines the yield on those because it's similar to the treasury's 10-year guarantee, right?
So all the people waiting for the interest rates to drop, they've already dropped, guys. Okay, we've already seen it. You're so behind the times if that's what you're waiting for the Fed, and you're going to read all these headlines about how the Fed is going to cut the rate and how it's going to affect the mortgage rates, and the mortgage rates are being affected right now in a positive manner for buyers. And you're not, well, you are seeing all-time record lows. We're not all-time, but it's only a record low for this year, guys, right? We've had lower
all-time 2025 record lows.
Yeah, all-time 2025. But 2024, we're at 6.02, okay, or 6.08, right? We were at one point in 2024.
And also just leading up to this, the low prior to that was 6.62 in April.
Right.
I forget what happened in April where it jumped up from that. This was another one hoping for the Fed to lower rates, and then the Fed didn't.
Yeah.
And then basically they're like, well, okay, that's not good. So mortgage rates bounce back up.
So I don't
a little bit.
I know you don't like to play a ton of the speculation game, but let's say the Fed gets a little bit over aggressive here in a couple weeks, and they do a 0.5%, right? They get pretty aggressive. Do you think there's a chance? God bless you. Do you think there's a chance the mortgage industry
reacts
negatively?
That's what happened last year.
Yeah, and,
Yeah.
and
So-
now your 6.5 turns into 6.75 or 6.8 because they didn't like the
More
aggressive
like
nature.
3/4 of a point. That's
All right,
what
or
we saw
7.
last time,
Who
right? We'll
knows?
be back at 7
Because they don't like the aggressive nature of what the Fed's doing. Maybe they're baking in, assuming a 1/4 point change.
There's
This is pure speculation.
yeah, I don't think the mortgage industry drives that decision making, but what they can do is they can react to how much mortgage business is written, and
Mhm.
they can turn that faucet down a little bit, meaning you want volume to go down for whatever reason. On whatever's driving that, you can say, okay, we need to write less mortgages as an industry in general. And so they can kind of, I'll say collude, but everyone gets together and they're like, listen, rates have to be at these artificially higher levels because we need to keep our volume in check. Or certain lenders can just price themselves out of active business.
I almost
Right.
feel
They don't
like
wanna
what
have
they
all that
want to
risk.
do is they want the
It's-
best qualified buyers and
Right.
rather write loans for them and not take anything that might be considered a little more risky because they don't feel the future of the economy is going to be that strong.
Yeah,
So they only want like the best buyer. Am I wrong about that? Like they're looking for the best
and
buyers.
certainly, especially people who are servicing loans, but they have a lot of the national banks will have a servicing platform where they actually retain the loans and they service the loans long term. They want performing loans, right? Like they don't want to be dealing with foreclosure type stuff, defaults on mortgage rates. So I mean, it's possible that if the Fed gets a little bit like if they start making the global economists nervous, you'll see. I think you'll see some sort of tightening up on what's happening. Yeah, what's happening. It's just like this. It's they're trying to drive mortgage business, and that could have the opposite effect.
So for this year, guys, this is the gravy days for the salad days for us buyers.
Ooh, gravy
for the
and
whole
salad.
year. Yeah, gravy and salad.
Got to
right?
pick one or the other.
Yeah,
Jim. You
okay.
can't do them both.
But yeah, so
a good country gravy on a nice Cobb salad. Come on.
So yeah, so this
Iceberg
really
or romaine?
yeah, this is really the best. This is really the best time for buyers in the whole year. For the whole year, we have the lowest interest rate recorded for this year. Right, our sales are slow. It isn't like you're competing with 5 other people for the same house usually. Right, insurance has gotten under control a little bit better. Right, and the future for that looks better. Right, it doesn't look like we're solving things on that level. So there's a lot of really positive stuff going on, and I just don't feel like the amount of buyers out there is not reflective of how good the market is and how good our unemployment is. Our unemployment is so good right now,
right?
And we don't have people out there saying it's time for me to to buy my home.
There's if I'm thinking about like if I were in the market, if I were a buyer right now, the one thing. Like it's nice to have some relief on interest rates, but that's not really where your relief is coming. And for now, and for the certainly through the end of the year, it's going to be like inventory is where it's at. Inventory is
It's
at
motivated
a point,
sellers.
Yeah, you got I like that too. Motivated sellers, but basically it's just sellers who are on the market and their homes are sitting for longer. And as a buyer, you have more opportunity to get a deal that you want. Like if you're into negotiating. Like now's the time where you're going to be able to negotiate and come out of it feeling good, right? Like feeling like you got a lot of what you needed. Mike D, we talked about earlier, is a very good example.
He's in the mid 5s, right? He
Yeah,
got into the
but I
mid-5s.
see it a lot across the board where people are able to get whatever it is that you need. You're able to get some of it from the seller.
He got
directly
a roof,
from the
he got a
seller.
roof, termites, septic system, discounts to buy down his mortgage rate to like mid 5s. I mean, the seller was so motivated, and you can't do that in when the buyers all start coming back and you're trying to elbow them out. You're never going to get deals like that.
Well,
Yeah.
you're
So I
a good
agree with Mike.
negotiator, but you got to have a lot of give on the other side to be able to succeed like that.
Yeah,
Yeah.
you do. And sometimes you get turned down. Sometimes you turn in the offer. It happened to me a couple of times recently, but I got my buyer something
But
else.
when you get
Yeah.
turned down,
But-
it's because the seller's got something better, or they're willing to wait for something better, and they're
Right.
hopeful that something better comes along. So sellers who have been like actively on the market, they're not getting the eyeballs on the home that they want. People aren't making offers. They start to say, okay, well, what's it going to take to get my home sold? And then if you come in with the attractive offer, you can still get stuff. So when I say you get what you need directly from seller, it's not always cash. Sometimes it's a price, right? Sometimes it's repair promises, things repaired. Sometimes it's just cash available. So you're able to put it together in a way where even rates aren't ideal. Like the rate question can be pushed down the road, right? And the ownership question is kind of like first and foremost, like, can you get into owning a home? And then you can take advantage of whatever rate, and I talk about refinances. I'm not saying guaranteed refinance rates in the future. There may be reasons you can't refinance.
Everybody's saying that the magic number, all the economists or the surveys and all the news, they're saying the magic number now is 6%, right? So we're supposedly 6% is when buyers in surveys are saying, I'll get back in the market at 6%, right? Well, if we get to 6% and all those buyers, let's just say that what they say is actually going to happen,
right?
You're going to be competing as a buyer with all those other people that want to buy at the same time. And right now, almost everybody I deal with, they can get 1 point off their mortgage rate just by going to the seller and saying, give me 2 points or 3 points off the, a 3% drop on the purchase price and give me that money so I can buy down my rate. And you're in the mid fives.
Yep.
And mid fives is awesome, right? And that's a 30-year fix. It isn't some kind of crazy loan. It's just like your regular loan, but you're buying down the interest rate. And I'm telling you, when everybody wakes up and the interest rates do start coming down, you're not going to get those deals anymore. The sellers are like, I got 5 other buyers. Why am I going to give you that?
Yeah.
Exactly.
Right. So don't fall into that trap.
There may be you might be able to be on the leading edge of that dynamic, right? If you're like what Johnny has done, like what we have many shoppers who have done this, set themselves up. You could be on the leading edge of when the rates come down a little bit and the pressure's still on sellers. Like you might be in that front pack.
Yeah, you could.
Right. But if if all you're doing is talking about waiting for rates to come down, you haven't had anybody look at your credit, you haven't had a mortgage professional really give you an in-depth analysis to see where you stand. By the time you get started with that, you're going to have missed that little leading edge, pack group. And whatever, it's not the end of the world either for me. I'm just like pointing out if your mentality is I got to wait for rates to come down, it's the wrong mentality. And we talk about it a lot
all the time,
right? Because it's true. It isn't that we're selling. We're not hard selling.
Right.
It's true. It's just, we're giving you real stuff, not sales stuff. We're telling you what's happening in the market. I talked about this briefly last week, Mike, but I wanted to have you here to talk about it in more detail. I read like 4 articles last week where people were complaining that the articles were about people. Remember when they said you marry the house, but you date the rate?
Yeah.
Right. And so buy the house and then refi later. There were like 4 articles, I think I read, different news groups, all saying that all the people that did that are complaining that the interest rates haven't dropped yet.
Yeah.
And they can't refi.
Yeah.
And they're really struggling. And I was like, that isn't what we meant by marry the house, date the rate, right? So what I mean by that is there were a lot of realtors and mortgage brokers saying that, and they didn't really care if you could afford the long-term mortgage that you were getting. They were saying, oh, just do this and you'll refi later. And they all made it sound like the refi was going to be around the corner.
Yeah, slam dunk.
Right? Like
there were people pushing the 3-2, the 3-2-1 and the 2-1 buy downs with that very kind of like mindset, which
those still would have been okay right now, though, right? I think those wouldn't have been bad at this point.
Well, anytime I've done the analysis, taking the money that is available to do that 3-2-1 buy down has always been, you're much better off doing a permanent buy down. So you don't.
I see. That's right, Mike. You're right.
Yeah, without going into minutiae on that, like if that money's on the table for me, it's like just take your points, buy down the rate permanently, 30-year buy down, not a 3, first year, second year, third year thing. But the pitch at the time was, yeah, do this 2-1 buy down, and then later this year or next year, when the rates come down, you refinance. And it's like, well, wait a second. Are you saying next year or the year after that, rates are coming down?
Yeah, like it's just guaranteed,
right? Of course. Look at it. Rates can't hold like this and you would get that as the pitch. And you get that same thing, like marry the home, or what is it? Marry the house, date the
Marry
rate.
the house, date the rate.
Sometimes that means coming out of the wrong, the whoever's saying it, they mean don't wait. Let's do your loan now. Like, why wait? There's no reason to wait. Which is the opposite. If I say something like that, I'm saying if you could get your configuration to work right now, there may be an opportunity for you to switch it up in the future. Maybe.
Right. Maybe.
When the timing is right. Don't count on it. But if it's there and when you reach a certain threshold.
But our message was even deeper than that. We were saying you don't marry the house, date the rate. But what we were also saying, you have to afford the mortgage that you're getting right now. And that's the one thing that we did. Well, I know you say, of course, Mike, but that wasn't, like you just said, that wasn't the message out there. They gave you half the message. We were giving you the whole message. And the whole message is, yeah, the interest rates are higher right now than in the past couple of years. If they do go down, you could always refi. But don't not buy the house you don't, as long as you can afford the house now.
Exactly.
Don't not buy the house you want to buy, because you're waiting for the interest rate to go down if you really want to buy a house. But make sure you could afford that mortgage payment. And then when interest rates get better, then yes, go ahead and refi and make the deal even better for you.
Are you going to be able to pay this for the next couple of years, just knowing you're going to get some relief in the future? Right. And it's like, well, no, don't do that.
Right. We were never like that. We're like, you have to afford the mortgage payment. You have to afford the mortgage payment now. And you got to be able to continue that mortgage payment, not just get into the mortgage.
And thinking about things like property taxes next year or the year after
and
that.
Look at what we did. Johnny recently looked at a house and he really was looking at it hard. And what killed him was the insurance. It was astronomical compared to what his budget was.
Right.
And that just killed his mortgage payment.
And with no like long-term. There was nothing you could do at the house to make the insurance go way down.
Right. It wasn't going to get a lot better.
Yeah.
So the thing is he's looking at everything in order to make the decisions he needs for his family, and he's looking at all of it. And it just really bums me out when I read that stuff. And first thing I thought was, these people are complaining about nothing, because why would they really think that, why would they really think that it was guaranteed that the interest rates would be going down by now?
I mean, it sounds good, I guess.
And then I start thinking, because they listen to all these professionals that were telling them that, but how can you say that it's guaranteed the rates are going to go down?
There's the thing, like,
you can't.
when it comes time to refinance, right? When it comes time, and I'm talking to people who bought end of 2023, like when we were approaching 8%, like people were 7.5%. And this is now the moment where they're saying, well, hey, we got like a 1% or 1.5% better, on the interest rates from when we bought. Are we now a refinance candidate? And it's probably the time to start looking at that. But there's a couple of things that need to have aligned. Equity position in your home is one thing that. Are you giving me a time signal?
No, I'm just letting you know I got a question when you.
He was like 1, 2. I'm like, wait a second. Is that 4 minutes?
You don't worry about that.
So, equity position in your home is something you have to consider when it comes to refinance. So if you did like an FHA, low down payment, maybe you did down payment assistance, like these things need to be considered. And has your home increased in value sufficiently so that one of the big benefits of refinances traditionally is, hey, let me get rid of mortgage insurance. Well, if you started, a year and a half ago, how much have home values increased in that year and a half?
In the last year and a half, maybe 1%,
maybe a little bit,
and
of
maybe
increase,
even
right?
You're right. It's flat. It could be a little bit negative or a little bit positive.
Yeah. So if you started out first-time home buyer, low down payment, maybe even down payment assistance, like, your rate's a little bit better, but you don't have the equity position built up to be able to absorb the costs of the refinance. And maybe this goes into the question you asked me, the guy doing the streamline with the no cost or whatever. But refinances do cost money. Usually you're not coming out of pocket for it, right? You're able to roll that into the new loan, but your loan is going from $300,000 to $308,000, right? Like you're increasing the amount of principal on your loan. You have to take that into account as it relates to the equity position. Like you can only do a loan at a certain percentage of the value of your home.
So let's get into that.
Can I ask a quick question?
Oh, I'm sorry. I'm
Right,
sorry,
so
John. You're right.
Two variables, right? It's a certain threshold. Now, correct me if I'm wrong. Certain threshold to your equity position to just change your rate, and then it's a different threshold for equity to take cash out, right?
Yes.
I'm accurate. Okay.
Mm-hmm.
Let's play this game where there's equity position looks good. They can at least do the rate change. And you talked about you're doing this without money out of pocket, right? So this is all your costs are going to be rolled into your loan. Can you buy down? Can you refi and then buy down your rate using equity difference in your home?
Yes.
So when you're doing that, does that put you on your the equity positioning that you need to do a cash out?
So if you're increasing your costs, right? So this is all about, like, when you do a cash out refinance, you have to be no more than 80% loan to value.
Right.
Right. So the value of your home is not going to change in this scenario, but your loan amount is changing. So if you roll in, let's say, whatever, you want to buy down a full interest, 1 point, you want to go from 6 to 5,
Well, so
right?
if you're refining right now, you refi to 6.5 from wherever you're at. And if you buy a full point, you're going to 5.5. Right?
Yeah.
All right. So,
right. So from a payment perspective, it's good, but it costs whatever it costs to do that.
Right.
You're going to roll that in. So what is the L in the loan to value configuration? You need to be below 80. So within that constraint, you can go up to 80% of the value of your home.
But it's doable.
It is. The question, and it's like, should you do that? Well, yeah. Can I get a lower interest rate? Yes.
Well, there's a break even, right?
It costs money. It's very simple to do a basic analysis, which is, hey, Johnny, give me $10,000 today. I'm going to pay you back $100 a month. Well, that's 100 months, right? So as long as you have this loan for 100 months or longer, that was a good call, because for the first 100 months, you're in the red on that decision. Then you break even, then you go into the black.
Nah.
So
I'll
yeah,
pass.
100-month, no
I'll
way.
pass.
24 month,
Right. That's different.
24-month break even.
60?
Right? Johnny, give me $10,000 today, and I'm going to pay you back $500 a month for the life of the loan. Right. So do the math on that. Maybe I should have done 12,000. Right. 60 month. You want like something like I would like a 2 to 3 year break even if I'm considering paying money simply to lower my payment, right? By buying down the interest rate. It's a full 30-year commitment. You're buying it down for the full 30 years. But it does cost money.
I just want to reinforce what Mike's saying about this. The reason why he's saying 2 to 3 years is you don't know what happens, because life happens. So if you have a 5 year, like Johnny says, 5 years, in my opinion, unless you bought the house last year, you're going to live there unless something really bad happens.
Right.
You'll live there forever. 5 years would be relatively safe, I think.
Because on average, most people stay in their home 7 to 8 years. I think it's kicked up to like 10 or 11, maybe 12 now.
Yeah,
it
it used to be 5 to
life.
7, and now it's more like
10.
Somewhere between 7 and 11. It's changed a little bit.
At some point, it was 50 years. Right? Like, how far back do you have to go where people bought the home that they're going to stay in for the rest of their life?
Their kids grew up in it, and then their grandkids grew up in it. Yeah.
But so the reason why Mike is saying 2 to 3 years is because of that thing I just mentioned. You don't know what's going to bring in life, and you don't want to be caught. Like if you have a 5 year thing and you refi, and 18 months later or 2 years later, you're selling, and you kind of knew you were going to do that. You didn't love the house, or you were trying to get a new job eventually in Tennessee or something. You're probably not going to want to do that refi.
And if you're really secure and you're like, like, I'm not going anywhere. I'm staying in my home. I'm not going anywhere. So the 3 year break even, I love it, because the remaining 27 years, I'm in the black on that decision.
Right. This is an analysis that you're going to do regardless of your refi plan. And Mike's always going to ask, what are you trying to do? You're trying to get a lower payment? You're trying to pay up debt? Like, there's different reasons people do this. And Mike's going to give you the analysis and give you his opinion and give you that break even number. And it's always going to be a math game. But I find it interesting that we can refi and use the equity positioning to buy down the rate.
Yeah.
That's a very fascinating approach.
And Johnny, there is a lot of people out there that have a ton of equity in their house, and they can get a huge interest rate drop on their mortgage if they want to keep the house at relatively low cost compared to the equity. Something like
I start to wonder, why I started thinking about it? I started to think about the sellers that are just they're motivated, but not like super motivated. But they're like, but if they could look into a refi where they're lowering their rate, would that keep them in their home? Would they not be
Right.
on the market?
Right.
You know, maybe I don't know.
So let me.
I don't
talk
know
to-
about that either. How many sellers are selling because they have to?
and then just get the interest rate. Like
Well,
they
yeah,
decide
like
to keep it, and
they're
then just
selling because it is just monthly too expensive.
Yeah.
Right.
So like one solution, like what Johnny's saying. Well, could you get a lower rate that gets you into monthly payment that is more acceptable? I don't know how many people are actually.
I don't know either.
Yeah.
I want to talk about the woman that
The streamline. I
yeah.
mean, the 203K refi.
So what happened was they went to put a roof on their house and they had a problem with the contractor or something. Something like that happened. I can't remember the whole story. And then what ended up happening was she wanted to do a refi, and for whatever reason she couldn't do that.
She wanted a HELOC to do the roof, which is it's a good
right.
thing. Like
Which would be a
home
smart way
equity
to do the
loan.
home equity line of credit. Low
I think probably a
interest.
home equity loan for me would be better there because it's probably a fixed rate, and you're taking all the money at once. Line of credit is like a big fat
revolving
credit
like
card.
a big
Yeah.
fat credit card. So
Usually.
So when I was having the conversation with her, she goes, "I'm going to do a 203K, and we're going to put the roof on. I already got the roofer, know the cost, everything."
Yeah.
And I said, "Okay." And so then she said to me, and the best part about it is I'm not paying anything.
Mm-hmm.
And I said, "Well, you're not paying anything out of your pocket."
Right.
And then she said to me, "No, I'm not. My mortgage broker says I'm not paying anything."
Mm-hmm.
And I go, "I really don't think your mortgage broker, if they're ethical, actually said that to you. You might have heard it that way. But what he's going to do is he's going to roll the costs into your loan so that you don't have to pull any money out of your pocket. It's still costing you. Basically, what you're doing is you're financing the closing costs because it's going to be rolled into the loan."
Yep.
Am I right so far about everything I said?
You are.
Okay. So then she said she got real quiet, right? Because I blew her mind, right? And I wasn't trying to. I was just saying, "Hey, look, I'm not trying to sway you. You have a mortgage broker. You're not going to,
What if
I'm not
he's just
trying
like
to
a really good dude and he's doing it for free?
Well,
and
I
he's gonna
said-
pay the doc stamps out of his
Well,
pocket.
actually, I said
Yeah,
to
what
her,
if?
there is a more,
We had there was a sponsor on this radio station for years who talked about
yeah,
a zero cost.
right, that it didn't cost you any. And, a couple of those customers, I've had some of them be my clients later after they had refied and then sold,
Mhm.
and they went with that company. They swear they didn't pay any money,
Okay. Yeah, I
But-
mean, I've seen loan estimates
right?
where there was no origination costs,
Right.
and maybe a lender credit to cover the other costs.
So they move the money around like they just,
No, you have a higher interest rate than you should.
right, you pay a
So
higher
it's as
interest
simple
rate
as
for that,
that.
right?
The same way
Right.
you could pay points
Right.
to buy down an interest rate.
Right.
You can receive money, Johnny. Maybe this is a technique we should talk about. You can receive money back by taking a higher interest rate.
Mm.
Right. So
Right,
let's say
right.
you were super, super tight on cash.
Mhm.
And no other way. You need an extra $3,000 to close. Okay. We'll take a rate that's, eighth of a point higher than it should be.
Yeah,
and
you're
that's
like,
got money coming back to you.
I'll spend $60 more a month on my
Yeah.
my obligation to
Right.
get this
To
this
get
cash
into it
from you
because I
guys.
just don't got my
Yeah.
$3,000 that I need the
Oh,
extra
we
$2,000.
never
And,
talk about
and this
that.
was like, I would rarely ever do that. And I would probably try to talk somebody out of doing that.
I would think you would.
But-
yes.
When rates were in the 3s and 4s, like that wasn't a terrible
Right.
like thing, to
Right.
consider, right? Hey, I'm $3,000 short. Well, I'll just take 4.25 instead of 4.125, and maybe that's my $3,000, right?
Well, doing that. So I know not all down payment assistance is created equally. Not everybody that uses it is created equally, and sometimes you're putting yourself in a really precarious situation because you're taking too big of a bite of the apple. That feels to me like an absolute last resort type situation.
Yeah,
Like,
yeah.
it reeks of desperation.
Mhm.
Yeah, but when rates were lower, it wasn't that
That bad.
it wasn't. It was more palatable, I would
Sure,
say.
Sure.
But here's the thing. So I can't police, and nobody polices how these things are presented to potential consumer, potential refi candidates. Like, how are they pitched? How are they sold? If you're getting called, if you're getting a mailer, if you're getting some sort of advertisement,
Mhm.
and you pick up that phone to make that call, you're almost guaranteed to get into a situation they're going to push you really hard to do
that's
the
true.
deal, right?
Yeah.
Like, oh, sign the app, no commitment, get the application, pull credit. Like, they're really not going to consult you about, is this really going to make sense? It's just kind of like, oh, we have this to offer, let's go ahead and do it. Now, the fact that somebody has talked to her about a way of solving her problem that she can't solve otherwise, right? So she needs a roof. She's not able to can't get qualified for whatever reason for home equity. Okay, well, here's a loan that might work for you. It's FHA, right? That's an interesting one to refinance into FHA,
But
right?
you're getting a PMI
Because you have
now,
mortgage
right.
insurance, there's upfront mortgage insurance, and so there may be some. Maybe that's the only game in town for her, the only thing she can do. But then you kind of tie that in with, well, I'm not paying anything. Like, it doesn't cost any. There's no costs. Like, I don't know how to deal with that. There's costs. As a reality check, there are costs to do a refinance. Number one, there's a title company that is doing work. They're going to get paid on their work. There is the county that charges taxes. Let's just call it taxes for
sell it or refine the house
for
right.
doing a
new
mortgage,
sale.
real estate
Right.
with mortgage. There's costs, right? So those two cost centers, I don't care which lender you're dealing with, those two cost centers exist. Who is paying for these costs? Now, you also usually have a loan, a lender who has cost built in. So the other guy used to advertise on this radio station, like, all those costs exist. He just makes sure he had enough fat in the rate to cover those costs.
That's right.
The other thing I heard was
That's
that
all
he
he
was
did.
servicing the company was servicing the loan, so they made extra money as the servicer of the loan.
Listen, it's possible that the lender basically says, how much money, like, what's the minimum amount of money I need to make on this transaction in order for me to do the loan? Because there's not a single lender who will lose money on multiple transactions and continue to exist.
Right.
That just, right. You got people who have to get paid on these. People do work. They got to get paid. And companies are in business to make money, not lose money. So if somebody is saying, hey, we're doing your loan and it's costing us money, which is essentially what they're saying, that is not sustainable.
Right.
So just logically, of course, it's not no cost. There's costs. Who's paying for those costs? Generally, I would say it's you,
and
the buyer or the refinance, the consumer.
And the thing I want to bring up is that there's nothing wrong with rolling in the money. There's nothing wrong with that. If that's what you want to do, and that's okay.
Sure.
But you need to be
part
told,
of your analysis.
Right, but you need to be aware of what's happening.
Right.
So anybody walking around saying, oh, this isn't costing me anything, or they're not charging me anything,
Yeah.
They need to be better educated.
Now, if you
and
can,
that's what, you need that from your professional.
And when it comes to like we're going to get into a refinance world here at some point. Like, it's coming up, I think, because rates are going to get down enough where people are hopefully not like desperate to refinance, but like Timothy might be a good example. Like, hey, he's at a certain rate. Can he get down? What threshold do you need to get? So that conversation is going to be happening. And it's okay to shop, like compare lender to lender on that stuff. Because ultimately you want the lowest interest rate possible with the least amount of costs, right? So you're increasing and you're going to roll it in. So instead of my loan going from 300 to 308,000, if I could get the exact same rate and it only goes to 304,000, boom, that's a good deal. And they can get the job done. They can perform, right? So you can do that type of analysis when the time comes. You can shop lenders, and maybe refinances is a good time to do that. There also may be cases where you have to do something. You need like this streamline. I'm not streamline, but the 203K. Maybe it was the only fit.
It kind of was. And the other thing is, and I'm not making fun of that person or anything. I just felt bad that she didn't know.
Yeah.
But she's a very sharp person, and she's self-employed, and that was part of the issue, was like the whole self-employment thing.
Interesting.
So that became a thing. But anyway, I just wanted to let people know that, if you're doing a refi, you're not pulling any money out of your pocket. It's not because it doesn't cost you anything. It's because they're rolling in the money. And if you don't know that, you better start looking more carefully at what they're charging you, because normally my experience is if they don't explain all that stuff to you, there's other fees that they're padding in there too,
Yeah.
just to see if they can get away, like a CNF fee.
You
right?
definitely
Like the
need
CNF
to go
fee.
to trusted professionals. And just because there's somebody your family member knows, they're probably amazing people, just might not be the most trustworthy as far as business ethics go. Florida Talk Real Estate is a team of pros, super ethical. It's why we've been able to do this for so long on this radio station. It's why they work together so well, because they're very like-minded. It's about getting it done right by you. And it's it's about information, it's about understanding, it's about really getting clarity about what it's going to take for you to get done what you're trying to get done. Buying a home, selling a home, stuck with a home, you don't know what to do. When you need a pro's pro in the mortgage world, remember FloridaTalkRealEstate.com. You can always call us on a Saturday, like who's on line one there, Jimmy?
Well, speaking of super ethical businessman, we have Greg Rice on the line with us. Greg, welcome to the show.
Super ethical.
Mm-hmm.
Hey guys, how's it going?
Hello,
good. Hey, Greg.
Yeah, my sister's marrying a luxury real estate broker. Hey, Johnny.
Yeah, but
you got to see the expensive engagement ring he sold her.
Thank you, Greg.
Thank you, Greg. Hey,
You got to see what an engagement ring that he sold her.
Yeah,
because he's an agent.
Yeah.
Okay.
Yeah.
Nice.
Hey,
nice.
So,
marry the rate. What is it? Date the no.
Actually,
I think with this, Jiv, it should be marry the house and marry the rate, because technically you're in a long-term commitment with that rate also, and then you divorce the rate.
Yeah, marry
get
the house,
refinance.
divorce the rate.
Yeah. But always get a prenup.
Yeah, exactly. Hey, I just we only got a couple minutes here, like 2-3 minutes, but I just wanted to go over something for sellers because we focus so much on buyers today. The sellers out there are thinking, holy moly, I got to sell my house. And this guy, Jim, is like, it's the worst market ever, right? I wanted to let those people know that our average sales right now, are still within the low medium level, right? We're not like Palm Beach, Broward, Dade, they're selling somewhere between 1,000 and 1,300 single family homes a month.
What percent are we getting like collectively on list price?
Oh, some of them are down to 7%, meaning 93% of list price is sold price now.
93. What's your stat holding?
I don't know, to be honest with you. I have to look at it. It's been a crazy time, and I haven't looked.
Because we're always
I'm telling you, last year I got creamed.
Yeah.
You've had some outliers that were like longer than,
like Brian's case. I had his house for 9 months, right? I mean, that just blows all my averages.
You guys could have had a baby in that time.
but for the sellers, but for the sellers, what I want to tell you is, if you price the house correctly, based on condition, even if the house isn't fixed up, but you base it on the condition of what other people in that neighborhood are selling based on your condition and size, and you price it correctly, meaning that you're not low, but you're with everybody else in that pack, you have a very good chance of getting what you want out of the deal. The people that get disappointed and pull the house off the market in today's market are because they were unrealistic as to what they wanted versus what the community was going for. And there was a big gap. Now, the other thing is for sellers, besides pricing it right, that isn't enough. You have to make sure that you're treating your house like you would your car when you sell it. When's the second cleanest day the car's ever been? The day you're selling it. The first day is when you buy it, right? The second day is when you sell it, right? And you do all that, right? It's supposed to be, right? And you're doing all that because you want to make the most money. Well, do the same thing with your house, right? And here are just a couple of tips, just real quick to go through it. Make sure that family photos are gone if you can, right? Try to take all the family photos,
especially if your family's super ugly.
What if you have a certain?
Forget about it.
Yeah.
There's almost no what if you have a certain, unless you have so many things on the wall, when you take all the pictures off, it looks like somebody used a Tommy gun on the wall or something.
Right.
Then maybe you leave the pictures up, okay? But other than that, no, there's no answer. Family photos, they come down. Why? The buyer wants to come in and think how the house is going to be for them. They don't want to know the people that are living there that much. They just want to know, how does this house work for me? And you wanted to keep focused on that while they're in your house, not start looking at your family photos. Other thing is pet items. It's okay to have a pet. I love pets, right? But make sure that your your house is pet odor free if you can, right? You don't want kitty litter smell or rangy dog smell, right? And you want to make sure that you kind of take those items away, because even if you keep a super clean house, some people just don't like pets and it'll shut them down. But if your house is super, super clean and everything, you might
But
be
a
able to
smell
not to
can
deal with it.
instantly turn you off from a
Smells
house.
are I talk about smells all the time. That's really, really important.
And you should bring in like a outsider to let you know how that smells, because
Yes,
we become
yes.
nose blind to our own smells.
We had one
Yeah.
family where I did that, where we had to have one of their best friends come over and tell them that their dog smelled too bad and they needed to do something.
Yeah,
with the
we
carpet.
get too used to our own smells.
Bulky and excess furniture, get rid of it. Especially because you're moving, get rid of it before you sell so that you have a bigger room, so it looks bigger. Really do that. And I'll leave off on this. Controversial, distracting decor. I had one house where the family, the person selling it and the couple, they were kind of like nudists, and they have nudist parties and stuff. So they had all this like nudist stuff in the house, like about like clothing optional and stuff like that. Take all that stuff out.
That's
Don't put that in.
controversial?
Yeah, people don't like
Can I have
that.
pineapple stuff everywhere?
It did.
Can I have
Just for research purposes, Jim, can I have the address to that house? It was,
Always great to have you with us on a Saturday. We flat done run out of time. We'll be back at it next Saturday. 2 hours of infotainment that we offer up every Saturday. Locker room's coming up next. Always remember, when you need a pros pro expert in their field, if you're buying a home, you're selling a home, you're stuck with a home, you don't know what to do, or if you just need a pro in the expertise that you're looking for in the world of the real estate market, remember FloridaTalkRealEstate.com, the one-stop real estate shop, FloridaTalkRealEstate.com. Mike Rauch, have a great weekend.
You too, my friend.
He's
Thank
the
you.
mortgage guy from the mortgage firm. There's Ross Komarinetz with Brightway Insurance, Juno Beach. Have a great weekend, my friend.
Thank you too, Jimothy. I'll see you at that house. It's Carl's house. See you later.
Carl. Thinking Carl, but I wasn't sure. Thanks.
Jimmy D, Jim DiPaola with the Florida Home Pros team. Have a great weekend, my friend.
Thanks, guys. Have a great weekend.
Thank you for being with us. Florida Talk Real Estate's back at it next Saturday. 2 hours of info.